My problem is everything else. The average stock year to date is down.
The tech names that we're discussing are driving the gains.
The bear market is continuing, okay? This is what bear markets do.
I think that the Fed's got more work ahead of it.
I think this is kind of the calm before the storm, so to speak.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowicz.
You know the kind of people that take the long weekend then add an extra day on?
Yeah.
Those kind of people?
Bramo's stretching it out.
Bramo just kind of stretching out the long weekend. I'm told Lisa's going to be back with us.
The black flies are terrible. She's up
tomorrow.
in the Adirondacks.
Is that what she is?
It's at the back end of the season up there. It's not as bad as early May, late April, but up near, it's like Fourth Lake or Fifth Lake or the Racket River in Gungadin, and
I'm not sure what that was. What's that? You fishing?
I'm canoeing.
Oh, you're canoeing.
Come on, John.
Okay,
John,
I had no idea. I've got
Bramo's
no idea.
up there.
It looked like you were fly fishing.
Bramo's up there. She's in the back though. She's
she?
so controlled. The brats are out front. She goes back and she holds it like this to keep, so you don't go in the rapids.
Stability.
Black flies. End of May.
I can tell you've done this before. I'm sure you have many times.
Much.
Yeah, sure. Okay, Bramo's going to be back for payrolls on Friday. We hope. From New York City this morning, good morning. Alongside Tom Keene, I'm Jonathan Ferro. Equity futures, better than good right now, up by 0.6% on the S&P 500. We've got a debt deal. The hard work starts now. You've got to get that deal through Congress. Tom, before we get there, let's get to Nvidia. Up by more than 3% in the pre-market and like this close to a $1 trillion market cap.
Yeah, the trillion thing, it's not a parlor game to me. To me, there's a legitimacy here to many billions. And LVMH at one point, popped a big number for the French stock market. But these are benchmarks that matter. And they matter on the how they did it. And Apple did it differently than Microsoft did it differently than Nvidia at this scale. But again, I look at it, John, as the number of employees. You're looking at 200,000 plus employees, where Nvidia is tiny. It's 70,000, 20,000, whatever. It's a smaller company.
Magic number this morning, 404.86 for that $1 trillion line in the sand. Right now, that stock, where are we? 402.79. You took that away too early. There we go. 402.79 on Nvidia right now. So, Tom, that's the story. Big gains in the equity market off the back of several names, a handful of names. Nvidia close to being a $1 trillion market cap. Tom, looking at the NASDAQ 100 up 5% over 2 days.
Yeah.
5% in 2 days. Year to date, that index now is up more than 30% year to date. This was meant to be the year of small returns. The challenges of tech last year spinning through to the challenges of tech this year.
Yeah, I think that's right. And I haven't looked at this recently here. You look at the WEI function, and I can look at the 1 year current return, and you got NASDAQ up 7% 1 year, S&P 500 up 1%, and Dow is barely red. But let's look at the Standard & Poor's 500. This is important. This is off the bear market low, John, of October, up 17%. The bears are still rationalizing that move. But, John, what people don't realize, we're up 25% from the beginning of the pandemic. Not the pandemic low, but let's say you made all the wrong decisions and you bought the day of the pandemic before it went down. You're up a good amount of, you're up single-digit nice returns.
If you stuck with it.
If you stuck with
it.
Kind of bear market it is.
Equal weight S&P 500 year to date. Do you know where it is?
I'll say negative 2%.
It is negative by about a third of 1%.
Unbelievable.
That spread, that outperformance from the market cap weighted S&P 500 versus the equal weight. Jim Reed of Deutsche Bank doing some work on this going into the weekend. Widest outperformance there going back to the late 1990s.
Well, I would go back to the Nifty 50 of the 60s as well. The way you can look at it, John, is take whatever index, NASDAQ 100, and you say, okay, 25% is made up of X number of names. We're up to where it's 51% are made up of 7 names.
Do you want to talk politics?
Yeah, I think we've got to. It's there today. We've got some great guests coming up, folks, to try to sort out the process forward, not so much the pitch battle.
This is what President Biden had to say. No one got everything they wanted. Speaker McCarthy saying something similar. We know any time we sit and negotiate with two parties that you've got to work with both sides of the aisle. It's not 100% of what everybody wants. You're going to get some pushback on Capitol Hill over the next couple of days. I'm told, Tom, perhaps we get a vote by Wednesday. They needed 72 hours to go through this. This is what the Speaker promised. And ultimately, we're going to read through this thing and see how much pushback we get.
What's interesting, and particularly for our international audience, I really want to emphasize, so we're going to talk process with Anne-Marie Horton and others here today. I believe Greg Vialier booked moments ago. And what's important here, John, is there's an American process to legislation which isn't to get in front of cable TV cameras and say, this is what we believe. That's over right now. That sort of ended over the weekend.
You hope that's over.
And what we have now is like actual step-by-step process to get to a successful outcome.
We'll go through some of that this morning. Let's go through the price action for you right now on the S&P 500. Equity futures positive, up nicely by 0.6%. Yields on a 10-year coming back in, down 7 or 8 basis points to 372. On a 2-year, 11 days of higher yields through the close on Friday. 2-year yields coming back down by about 6 basis points. Still, in and around 450 this morning.
10-year came in, and I would look at the vanilla spread 2s10s, the difference between that high 2-year yield and a lower 10-year yield. John, we're out way through 80 basis points. I'm sorry, this is not a small matter anymore. Will we test the great inversion we saw a number of weeks ago? 78 basis points now in the 2s10 spread.
Brian Levitt joins us now, global market strategist at Invesco. Some guests had the courage, the confidence to stick with it all the way up year to date. Brian Levitt, one of them. Brian, you say this: I would view any near-term challenges as a buying opportunity. Brian, why are you still so constructive this equity market?
Well, typically, if you look in U.S. history, anytime inflation has peaked or come down, or just about any time the Fed is done tightening, you've done well as an investor over the next couple of years. So, when I say near-term challenges, look, we know that we still have to see the lagged effects of all the policy tightening, and the economy is still going to moderate or even weaken from here. But history is on our side. If you can look beyond just a handful of weeks or a handful of months, markets tend to do very well in the aftermath of tightening cycles, and we're getting quite close to the end of the tightening cycle, if we're not already there.
You guys are the buy side. You've got all your internal analysts, and you're also, of course, speaking to people pitching equity and bond ideas. And, of course, Invesco is a legendary bond house. If we have sticky inflation, Brian Levitt, what does that do to revenues of companies? They do better, don't they?
They do better, although I don't think that when we say inflation, we don't mean that inflation is going to sit here at these levels. But to your point, they're going to come down, but likely be higher. Inflation's likely going to be higher than it was in the last cycle, which you're right. That is nominal growth, and that is supportive for corporate earnings. The challenge that we have, of course, though, is that how much tighter is the Fed going to get, and how much more inverted is this yield curve going to get, and what type of economic response are we going to have? So we still haven't seen all of that. So there's still challenges here, and we would still favor more quality investments rather than thinking about what the beginning of the new cycle looks like. But again, investors should I'd caution them on being too defensive here. Even if you have some retracement in the next few weeks or the next few months, ask yourself, will things be better over the next couple of years? Will inflation be back to a more reasonable level? Will the Fed be on the other side of this? And will the economy be recovering? And I think the answer to all those questions are yes, which means we don't want to be too defensive now.
I've got to go to the allocation as global market strategist. Is too important. U.S. domestic quality versus international quality. Which way do you tilt?
I think we need to be increasing our exposure to international quality. I mean, the U.S. does well in these in the more challenging economic environments that could be ahead of us. But if you're thinking ahead to the next stage of this, the end of tightening, well, that means the interest rate differential between the U.S. and Europe and some of the rest of the world is going to narrow, and that tends to mean the end of a strong dollar environment, which we've had for quite some time. So most investors are light on international, building up positions, closer to 15-20% international equity exposure. I think makes a lot of sense here, particularly given the valuations and the catalyst of what could be finally peak dollar.
Brian, given what you just said then, are you anticipating a change in equity market leadership?
Well, the equity market leadership will change when we get to the other side of the economic downturn, or at least in the middle point of the economic downturn. That's when you start to see more value, more cyclical, emerging markets, smaller caps participate. So in the near term here, it's quality, it's larger cap, it's growthier, and we're certainly seeing that in the market activity. The shift comes typically in the midpoint of the economic downturn, and the market getting ahead of what will be the new cycle. So I don't think we're there yet, but we're on the path to that.
Brian, what do you say to people who have been in this market, who are hearing a lot of people complain about narrow breadth in the equity market, the outperformance of uber cap, mega cap tech names like Nvidia, Microsoft and others? Brian, what's your message to them this morning?
Well, the message is that this is playing out as we think market cycles tend to play out. If you remember in the beginning of the year, the market thought we were getting a soft landing. And so you saw value, small caps, emerging markets do very well. That was call it mid-October through probably the end of February. And when inflation remained sticky and the Fed kept raising rates and the concerns of a recession became more heightened, well, that's when we shifted back towards a more defensive posture, quality, larger cap, growthier. So I'd say that these markets are playing out as you would expect them to play out, given what the trajectory of the economy is likely to be. And you'll see broader participation in these markets on the other side of this. Again, we're not there yet, but at the midpoint of the downturn in economic activity, you'll see a shift towards investors favoring those names that are going to do well in a cyclical economic recovery.
Well, a handful of names doing well right now, and one of them is Nvidia. Brian, we've got to leave it there. Brian Levitt there of Invesco. I'm not sure how many people saw this coming. So far, year to date, Nvidia up more than 100%, blasting through those levels in the last couple of weeks. Nvidia in the pre-market up by 3.5%. Year to date, as we said at the start of the program, the Nasdaq 100 up 30% and some. Year to date, TK, just phenomenal run. Just looking at the number on the screen, 403.29, line in the sand for a $1 trillion market cap, 404.86. Just short of that, Tom, at the moment.
I mentioned this last week. If I could spell here, John, you got to help me with my typing today.
Well, what are you trying to type?
I'm trying to get into the FA screen.
I'm not a mind reader.
You got,
what are you trying
EBITDA.
to do?
Their EBITDA
Right.
margin modeled out as 50 cents on the dollar. The big difference here is these guys are profitable versus 2001.
The CEO with some hyperbolic language over the weekend. You see that? Feeding the frenzy.
He was.
Just feeding the frenzy. He's still trying to spell.
I'm trying to type.
This is going to be a good week, isn't it?
S-S-A-A-A.
Judy Norman of UCL on the debt ceiling.
K-K-K.
Coming up next.
Keeping you up to date with news from around the world. With the first word, I'm Lisa Mateo. The White House and Republican congressional leaders are gearing up lobbying campaigns to win approval of a deal to avert a U.S. default. Both President Biden and Republican House Speaker Kevin McCarthy expressed confidence they would muster the necessary votes. The bill will suspend the debt ceiling until January 1st, 2025. In exchange for Republican votes for the suspension, Democrats agreed to cap federal spending for the next 2 years. In Spain, Prime Minister Pedro Sanchez is trying to hold on to power after a crushing defeat in Sunday's regional elections. Sanchez surprised his adversaries Monday by dissolving parliament and triggering a snap general election within hours of learning the full extent of his losses. Spanish parties will have less than 2 months to prepare for a campaign for the July 23rd election, which had been expected in December. When Jamie Dimon takes center stage at J.P. Morgan Chase's China Summit Wednesday, he'll face a business landscape that looks vastly different from his visit 4 years ago. In 2019, the last time the flagship event was held in person, the U.S. bank and its Wall Street peers were gearing up to cash in on China's opening of its $60 trillion financial sector. Today, U.S.-China tensions are high. The Chinese economy is sluggish, and Beijing is cracking down on foreign businesses. Elon Musk's private jet has landed in Beijing in the billionaire's first visit to China in 3 years. As sources tell Bloomberg that the Tesla chief is expected to meet with senior Chinese officials, including Premier Li Cheng, as well as a visit to Tesla's Shanghai factory. The EV maker is nearing the final stages before starting trial production of its revamped Model 3. Global news powered by more than 2,700 journalists and analysts. I'm Lisa Mateo, and this is Bloomberg.
I think this agreement frames all that from limit, save, grow. It doesn't get everything everybody wanted, but that's in divided government. That's where we end up. I think it's a very positive bill. I think at the end of the day, people can look together to be able to pass this in the House and the Senate together.
The agreement prevents the worst possible crisis, a default, for the first time in our nation's history. I strongly urge both chambers to pass that agreement. Let's keep moving forward on meeting our obligations and building the strongest economy in the history of the world.
The President of the United States and Speaker McCarthy, the hard work starts now, getting this bill, this agreement through Congress. Speaker McCarthy claiming 95% of his party were excited by the deal. I can tell you Wall Street, not so much excited, just looking forward to not talking about this anymore. Your equity market on the S&P 500 positive by 0.6%. Equity futures positive, a lift off the back of further gains for Nvidia. That stock is just on fire year to date. It's up another 3% and some, adding some more weight to the rally in early trading. In the bond market, there is a bit of rally for treasuries. Yields are lower on a 10-year right now. We are down by about 7 basis points, 372. On a 2-year, we're down about 5 basis points to 450. This from Citi's Andrew Hollenhorst. 200,000 new jobs on payrolls Friday. Another 0.4% month-on-month core CPI reading on June 13th would cement a hike on June 14th. That's the Citi view, long-held view, hikes in June, hikes in July.
Yeah, and Jerome Powell's not going to declare victory, as is the governor of the Bank of England, because they're looking over his shoulder. Jerome Powell's looking across the Atlantic at 9% retail store inflation in the UK. The stickiness is out there, John. Countries, maybe Spain did a little better, but the stickiness is out there. And, they're just going to move forward with their strategy. It's all there is to it.
And more recently, the dollar strength is out there too. Just on the currency pair, the euro against the dollar, a break of 107 a little bit early this morning. So 106.73 is the lower of the session at the moment, about 107.32, Tom, going into payrolls in a couple of days' time.
And very quickly, you look at euro yen there, take out the dollar with a 150, really hasn't moved yet. It is weaker euro, weaker yen. We're going to give you a lot of different takes on what's going on in Washington today. Of course, Anne-Marie Horton with Balance of Power is scheduled to be with us. Greg Valliere will be with us much more on the politics and the process. But right now, I thought we'd look at the debt process away from people standing in front of TV cameras talking their book. Julie Norman's book is To Root for the Baltimore Orioles. She's co-director of UCL's Center on U.S. Politics and joins us with the Orioles well over 600 ball. Professor Norman, explain particularly for our international audience this unusual civics process in America. This debate is not over, is it?
Oh, it definitely is not, Tom. If anything, it's really just getting to the hard part now. We have this framework deal between Biden and McCarthy, but now it needs to get through 2 houses of Congress, both of which are very closely divided. So we have McCarthy in the House saying over 95% of his caucus is supporting this. I think that's pretty aspirational at the moment. It's going to be tough to get this through the House and then again have to get through the Senate as well before it finally gets to Biden for signature. So still a long way to go and still a lot of politicking in between.
I actually went back and looked today at Thaddeus Stevens in the Daniel Day-Lewis, Sally Field movie Lincoln, jawboning one of his fellow colleagues about changing his vote on the Emancipation Proclamation. Are the Republicans in the House going to be jawboning like Thaddeus Stevens in the movie Lincoln?
It's possible, Tom. I think we might see all kinds of theatrics in these next couple of days. I mean, I think we know for sure that many in the Freedom Caucus are not going to support this bill. We've seen that very vocally already. I think we'll see a test already this afternoon with the Rules Committee needing to decide what kind of shape even any kind of voter discussion this bill would look like. But there are many Republicans who are open at least to supporting this or haven't been a firm no. Democrats, I would say, are also probably split down the middle. Many in the Progressive Caucus are not going to go along with this, but many in the New Democrat Caucus and the more pragmatic, moderate kind of side of the Democrats might be able to get this over the line.
Should we expect amendments in the House and then it goes to the Senate? Can there be amendments in the Senate as well?
So we have heard threats of amendments from both, and that is one thing that could not only, stymie the process, but also just slow it down so that we kind of get to the X day, just this amendment process. So that is part of it. I think Schumer will try and get it through quickly. McConnell so far has been pretty much leaning his weight into it, but we've heard Lindsey Graham, other senators say they're not going for this, and others who might use it as a sticking point to try and get through some of their own pieces as well.
Julie, can we talk about substance? What is the source of deep unhappiness at the fringe of either party?
Yeah, well, it's interesting, John. I mean, this bill, it's such a test for the center, really. And so it's a pretty straightforward bill, I would say. But what it does do is just not go far enough for Republicans who really wanted to see much deeper cuts for a much longer period of time. And it goes a little too far for progressive Democrats who didn't want to see any kind of change for work requirements, for aid, for food stamps, for these kinds of things, and didn't want to have to see any kind of clawing back from some of the other budgetary decisions Biden had already made. But in the big scheme of things, it doesn't change things massively in terms of what we would expect for a spending bill later this year anyway. So I think Biden thinks this is pretty much a good deal for Democrats in the long term, and for McCarthy, probably what he was going to be able to get through this as well. So for a centrist moderate, it works, but for the wings of the party that are either party that are quite strong right now, either goes too far or not far enough.
With that in mind, where does that leave Speaker McCarthy's future? Is there a big question mark over that?
There is to a point, but honestly, we haven't heard strong threats to McCarthy yet from the GOP. I think there are some Democrats even who would be somewhat sympathetic to him through this process, but that hasn't come up as much as one might think it would. My guess is behind closed doors, there's some of those murmurings, but it doesn't seem like they're really looking to push that button just yet. What I do think more is McCarthy is obviously going to be under scrutiny this week with to what extent he can whip these votes.
Julie, you are world acclaimed on the measurement, the politics, the process of terrorism. If we flatline the Pentagon or even keep it low single digits, real spending growth, can they project worldwide to defend us from terrorism?
Well, Tom, I think one of the key things in the bill is that military spending is supposed to continue to increase slightly, which is something that Biden agreed with and that Republicans do. And I do think that's one thing that'll keep a lot of members of both parties on board, because you don't want to see a gap in security preparedness for terrorism or for anything else that's going on right now. So I do think that's key. And another thing to underscore here is the closer we get to the X date, God forbid, if there's going over the cliff, that is a risk to national security. It cuts the ability to pay service members, to fund the military, and just makes the U.S. much more vulnerable.
Treasury cash balance, $39 billion.
Thank you. Did not know that.
I mean, we were getting close.
Coming down.
No surprise we got a deal over the weekend. Julie, thank you. Julie Norman there, co-director of the UCR Centre on US Politics. That was my last read of the data. Wall Street's moving on. This is what Goldman's got to say. Goldman Sachs and a team led by Jan Hatzius, calling it a major reduction in uncertainty, a minor reduction in spending. A lot of economists on Wall Street putting out some estimates about what it will mean for growth. They said a spending deal looks likely to reduce spending by 0.1 to 0.2% of GDP year over year in 24 and 25. Pretty lightweight stuff based on what Goldman's got to say.
Yeah, we're going to have a lot more comments on this. I think Greg Valliere talks about, it's a headwind and well, maybe it's a light breeze here is what we've got going on. This will be good analysis. And John, I'm going to be honest, I'm going to wait for the Congressional Budget Office. Again, for those of you international, this is the analyst of our fiscal policy. It is bipartisan. It's not politically tinged. They're going to walk through this thing at some point.
And then maybe we could walk on, move on, and Tom talk less about debt ceiling drama. Barely talked about the banking situation over the last couple of weeks. And then we can focus on the data again.
Yeah.
Payrolls on Friday. We're looking for something again in and around 200K. I'll give you a sneak peek of our survey so far. The median estimate is 190,000. Looking for unemployment to tick just a little bit higher from 3.4 to 3.5. But given where Federal Reserve projections are for year end, which is 1 full percentage point above that level, Tom, there is a belief from some, including from Citi, that this Federal Reserve is going to do more when they convene, when they meet in the middle of next month.
But wait, the simplistic view here, folks, is if the Fed, quote unquote, does more, that's bad for the market. and there's a lot of people pushing back against that certitude.
Well, before we get to policy, you've got to start with the data. Is bad news, and good news, good news. We've got to do that ballet, that dance that you love.
Yeah, I can't stand
good data right now, I think, is good news, isn't it?
I'm looking for a recession. Is it out there? Did you see it this weekend in New York? I didn't see it.
Is Nvidia looking for a recession?
You know, you're out in the Hamptons, my God.
yeah, right. From New York, this is Bloomberg. There is only one stock to watch right now, and here it is. Nvidia, absolutely flying year to date. Flying at the pre-market too, up another 3 or 4%, 403.82, just short of the $1 trillion line in the sand. 404.86 is the number we're looking for. Now, typically, I don't care about this stuff. I don't pay much attention to it. $1 trillion market caps, round numbers, TK, not really my thing, but this is phenomenal because we've added so much weight to this name in such a short period of time. We're talking about hundreds and hundreds of billions of dollars of market cap, TK, in weeks.
And this is not Apple, not Amazon, not the rest of them. 26,196 employees. This is a tiny company with a ginormous valuation, 55.5. It's like LVMH. Let me get that up right now, John, just to give you. It's apples and oranges. I get that.
Sure.
French luxury company, but LVMH is 30 times earnings, and Nvidia is at 55 times earnings. Apple, if I do the same study, somewhat closer to Apple's 30 times earnings. That's at premium price for Nvidia.
It's just amazing. 403.75. Heard a lot of people describe it as follows. A gold rush and Nvidia are providing the shovels. That seems to be the takeaway. Dan Ives sat with us of Wedbush on Friday.
Dan was great.
Said something similar. The CEO was speaking over the weekend, TK, and I think this is the difficulty for a lot of people who aren't in the name. What's real and what's just feeding the frenzy? The Nvidia chief saying that tech was at a tipping point, said things like this could be a new age of computing. All of those things, it's just pile on, pile on, pile on.
It's pile on there, but I'm waiting to hear comments from the bigger companies that have to buy these expensive chips from Nvidia. And what I'm hearing in interview to interview, and I think Neuberger Berman said it best, they're looking at margins coming on here where you get some significant increase in margins out 3 years, out 5 years. Are we modeling in that now? Maybe.
We take it from that single name to the index level, a lift in the equity market, S&P 500 futures, NASDAQ futures, all up quite nicely this morning to kick off the trading week. We're up by 0.6% on the S&P. And there it is again, just monster outperformance on the NASDAQ 100. That index is up by more than 1% this morning. Year to date, it's up by more than 30. It looks like in about 3 hours' time, we'll add some more weight to that rally. In the bond market, helping things out maybe, yields lower, but yields higher didn't stop things, did it? We were down about 5 basis points on the front end on a 2-year to 451. We're down 7 basis points on a 10-year to about 372. So you get more inversion, TK, which is what you've been looking at over the last several weeks or so.
Now. We're not up to 109 basis points, a full percentage point difference in yield between the 2-year and the 10-year. We're not there yet, but, it's something worth watching today. Right now we're going to pause, and John's going to weigh in here because I think the first time I ever saw Jonathan Ferro was on the front lawn in Frankfurt, freezing, getting his 30 seconds of fame in front of the ECB building. So I'm going to set this up, and then John's going to wax philosophical because he lived the 25 years of the ECB. Eric Nielsen is the chief economic advisor at UniCredit, and Christine Lagarde knows he is the optimist on Europe. He joins us now with his important note on the 25 years of the ECB from Duisenberg to Lagarde. Eric, what has been the biggest surprise for you in this nascent institution getting out to 25 years? What's the thing from Duisenberg to Lagarde that surprised you?
That's a very good question, John. Sorry, Tom. I think it is the combined picture of agility. You never know what comes your way, and as we know, when I wrote, the ECB was not a perfect institution set up, or let me put it this, or better put, the economic pillars that should underpin a central bank were not perfect, so they had to adjust. with policies and operations, and they did very well indeed.
One of the great questions we have coming out of our coverage of the International Monetary Fund meetings is the new Europe. Is it a more vital Europe, somewhat like Nielsen optimism, or is there still a Eurosclerosis out there?
No, I don't think that would be my description of it. Europe has done very well in growth numbers. We have had our hiccups here and there. The key point to take away from the present situation is that compared to America, Europe was hit by a massive terms of trade loss with the commodity price increases, while the US at the same time gained a little bit in terms of gains in terms of trade, and then gained, of course, from a much more powerful fiscal stimulus during the COVID, and that has been going on. So the underlying or the shocks that comes into Europe right now and that the ECB has to deal with is very, very different. So if I have a concern right now, it is that the ECB is reacting in policy terms so similar to the Fed, even though the shocks are so different.
Eric, what do you think the optimal policy response looks like then?
Oh, I mean, it's a tough one, and it's easier to sit here and talk about it than actually do it. The key issue, of course, is that it is a supply shock in Europe, and therefore you should do as little as possible. In an ideal way, as you originally saw it, should do nothing. You sit through a supply shock as a central bank. But it was so big and oncoming, and so many uncertainties were at play, including the relative price changes between services and manufacturing and all the rest of it, so that they had to move. And I think that's right. Maybe I would have moved less, and they're right to have moved faster or moved when they moved. But I think they should have stopped a little bit earlier and then use their great standing and great communication skills to explain that they would not let inflation expectations run away from us, which never happened, right? So I think the risk is that we are paying a price down the line for too tight policies.
Eric, when you say great communication skills, is there a little bit of sarcasm laced in that statement?
No, I didn't mean it that way. No, I didn't mean it that way. The issue here is that there are so many people speaking at the ECB, and that's natural when there are so many people involved in policymaking. I meant it sort of across, and I meant it actually positively. And if you look across the clear the statements at the press conferences, and I, for one, would like a more intellectual conversation with journalists at the press conferences, for sure. There's no doubt about that. But the agreed message is there. But we then add what particularly Isabel Schnabel and Philip Lane, for example, communicate continuously. I think this is a very good communication in terms of how their reaction function is and how they think about the data. I don't agree with all of these details, but I understand them, and that's what the communication is about now.
I'd love to get your view on growth as well. There seems to be a takeaway from a lot of people at the moment, Eric, that China is slowing down. It's not picking up relative to expectations in the way that some people had imagined. And for that reason, Europe's going to face some headwinds. You've seen the weakness come through at the euro. Euro broke to about 106 briefly a little bit early this morning. Eric, what's your assessment at the moment of the European economy? Is there weakness emerging from your perspective?
Yeah, for sure. So I think I am amazed how similar all the forecasts are, from commercial forecasters to the IMF and ECB and everybody else. They're given all the uncertainties. But when you talk to the forecasters who are actively making these forecasts now and ask them how the risk profile is, it's stunning how easy it is for everybody to agree on the downside risks and have a hard time thinking about the upside risks. So I think the downside risk is clear. And if I were a forecaster still, I am pretty sure I would put in a small recession later this year. There's some fiscal tightening that's partly made up by EU money. There is a huge monetary tightening, and we are just seeing the beginning in the first quarter. You saw from the bank lending survey the effect of this, and it's coming now, big steam. And then the little we have from the export side that usually come rescued us. As you said, you see it with China now, and we saw Germany actually being in recession now, hitting us quite hard. So I think it's difficult to imagine that we don't kind of skirt a little bit below zero.
Eric, what does the elasticity or responsiveness of the financial system of Europe to higher interest rates? The banners are so different on the Bloomberg. I mean, Europe's got a real authority to it. John, help me here. They're raising rates. We're going up 25. We're going up 50. And we're setting dates and all that. But as Trichet would say, to diffuse that monetary policy through 17 or whatever nations, how responsive is the system to higher rates? Is it like America or is it unique?
No, it's not unique, Tom. And I agree. This is the question. I've been out seeing clients in Europe for the last couple of weeks, and that's the number one question you have now. Given what we've seen with Credit Suisse and in America, what's the outlook for the financial system in Europe? And I'll say the following. If you had told me at any time in the last few years that we were going to get the biggest real income shock to the economy we've seen in decades and the biggest tightening of monetary conditions at the same time, what would you think happened to the financial system? It would be foolish not to think there would be problems here and there. It's inevitable. I mean, but so that's the first statement I will make. The other statement is that it is impressive how strong the bigger part of the financial system is, particularly the banks supervised by the ECB, have been and still are. And I certainly see no reason to doubt what virtually all the bank analysts out there and the ECB say, that those big banks are solid, are good, and can sustain the shock to the system. So I'm not worried about systemic issues, but I would be very surprised if you don't see something in the fringes over the next year.
Eric, wonderful to get your view on things, as always. Eric Nielsen there of UniCredit, looking for potentially a small recession by the end of this year. And I have to agree with Eric on those points, Tom. This idea that we got this aggressive tightening from the ECB and the lack of damage we've seen relative to expectations has been absolutely phenomenal. You started the conversation by reflecting on the late Wim Duesenberg, who was the first ECB president. What are you most surprised about? I think with the exception of maybe Eric, who's been very constructive on the experiment, even at its darkest days.
Yes.
I think a lot of people would be most surprised that it's still going. That it's still going, Tom, at the moment. It's pretty impressive.
Yeah, I think Martin Feldstein, the late, wonderful Martin Feldstein of Harvard, was very articulate about this, about the core of Europe and their dominance. And, of course, a test with Greece and Italy here a decade ago. But it's not as homogenous as America, I just think is the simple lesson. And that's still true today.
You talked about the diffusement, the channel for monetary policy to go through as well. Tom, big public market here in the United States, huge debt market. In Europe, all about the banking channel.
I'm sorry.
All about the banking channel.
The conversation at the IMF with Gentilini, the former prime minister of Italy, he was appalled at the play of AC Milan.
We won on the weekend. Qualified for the Champions League, I'll have you know. He was a Juve fan. He's a Juve fan. Okay, next hour, we have a debt deal down in Washington, D.C. And if it passes, you could get $1 trillion of T-bill issuance before year end. So that might be fun. Talking about that, Ed Husseini, the Columbia Threadneedle man himself, just around the corner from New York City. This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. Russia said it downed 8 drones aimed at Moscow early today, the biggest attack on the capital since the start of the war with Ukraine. The Kremlin has intensified its bombing campaign ahead of a long-awaited Ukrainian counteroffensive to retake occupied territory in the country's south and east. Ukraine has accumulated billions of dollars of weapons from its U.S. and European allies for the military assault. Turkish President Recep Erdogan is promising a team with, quote, international credibility to manage the nation's finances. A new cabinet is expected to be named this week after Turkey's longest-serving leader extended his rule by another 5 years. Bloomberg has learned the most significant potential appointment would be Mehmet Şimşek, a market-friendly former finance minister. The lira weakened toward a record low after Sunday's runoff vote. Deutsche Bank says its hiring spree in mergers and acquisitions will help it boost ranks and take back some market share from its Wall Street rivals. The German giant has signed on M&A veterans from peers including Bank of America, Credit Suisse, Lazard, and Citigroup over the past couple of months and plans to hire more. Global news powered by more than 2,700 journalists and analysts in over 120 countries. I'm Lisa Mateo, and this is Bloomberg.
This is the new computer industry. Software is no longer programmed just by computer engineers. Software is programmed by computer engineers working with AI supercomputers. These AI supercomputers are a new type of factory. 15,000 startup companies in the world built on Nvidia today, building on Nvidia today, and 40,000 large companies, enterprises around the world are using accelerated computing. We have now reached the tipping point of a new computing era.
Feeding the AI frenzy. Jensen Huang there, the CEO and co-founder of Nvidia. That stock is just lighting it up big time year-to-date on the S&P 500. Biggest gainer year-to-date so far. I think we imagine it finishes there, but it is only May and we've got gains of more than 100%. So let's see what happens in the second half of 2023. We're adding more than 3% to the rally on Nvidia, 402.37 and just short of a $1 trillion market cap. The moves right there helping out the S&P 500 and the Nasdaq in a much bigger way. The Nasdaq up by more than 1% once again. The S&P 500 this morning positive by 0.6%. A debt deal in Washington, D.C. means yields are lower this morning at the front end by, let's call it 5 basis points to 450 on a 2-year, going into payrolls on Friday. And this is your number, your estimate in our survey so far. 190,000 is the estimate. Tom, going all the way back to spring last year, on the day of the release of payrolls has beaten expectations every single time. So let's see what happens this Friday.
You've done this twice correctly, which is payrolls is early this month. I believe it's a June 2 date, John. And geez, that's important. You know, if we sustain over 200,000, I believe you said Hollenhorst is looking for that.
25 in June.
Yeah.
25 in July.
200,000 jobs.
He thinks 200,000 jobs gets it done. And maybe
Yeah.
you get a print at 0.4% on CPI on June 13th.
It's going to be an eventful 4-day week here, and we're going to be part of that with the market moving up. Futures up 24 right now. We thought we'd dive into this a little deeper than the back and forth of OMG, NVDA. Mandeep Singh knows that when you do EE electrical engineering, it starts out with the Wheatstone Bridge, and then you cross a bridge over to differential equations, and heaven forbid we get Maxwell and magnetism right. Mandeep Singh owns the high ground at Bloomberg Intelligence. Mandeep, this is a kid out of Taiwan off the boat, Oneida, Kentucky, population 410. He is a textbook immigrant. He parachutes into Corvallis in Oregon State, and magic happens. When did the magic at Nvidia happen?
I mean, this has been going on, I think, for the last almost 25 years, and he has built that, in terms of focusing on a niche segment and then really expanding the scope of computing, and in a way that it's so innovative in terms of disrupting the existing framework around leveraging CPUs to really a new style of computing. And I think that is where everyone has been caught off guard with the pace of the change that it can bring. But clearly, the innovation is there, and that's why everyone is so excited.
Take us not to the hopes and dreams of AI 3 years, 5 years, 10 years out, but the here and present, not danger, but the here and present reality for NVIDIA. Can they sustain the growth now of a 55 multiple stock?
Well, so I think it's a little hard in terms of looking at it, beyond 2023, simply because right now we have easier comps and we are just past this, cloud digestion phase. So this happened to be a much shallow inventory correction. And what everyone is expecting is for the market to really do well in terms of the demand side on the data center side, to hold up for the next 6 to 8 quarters. I don't know if that will be the case given how much uncertainty we have, but one thing we know is there is this secular shift from CPUs to GPUs, and really what they're selling is almost $200,000 for a server box that used to cost $10,000. So look at the ASP increase that they have been able to generate from this new device that they have created. And that is quite powerful. When you see a company, kind of raising ASPs like this, that is very positive for the gross margin. And I think that's what you're seeing in their results right now.
Mandeep, the cheat guide to the market action this morning is just to say, well, Nvidia's up because they unveiled some new products. I wonder how many people actually know what those new products do. Mandeep, you're someone who probably does. Can you tell us what this new product lineup is?
Yeah, so the biggest use case is around training these large language models. And what you need for this is a lot of computational power, and a GPU can do it in a very short period of time compared to the traditional CPUs. Even if you stack a lot of CPUs, you can train these large language models. So one thing they have proven is not only is it an innovative way, it's the only way you can train a large language model. And think of, our computational requirement across the board, across industries. You need this type of technology to enhance the productivity. And that's something that's not it's going to drive a massive refresh cycle. And that's why everyone is so excited, because the existing market needs to refresh to the new way of computing. And that's a pretty large market when you think of semiconductor as a $600 billion market.
Who is their competition?
Competition would be, AMD, Intel to an extent. The problem is they're so far behind, especially Intel, in terms of focusing on GPUs. And that's where, they missed the boat for at least 5 years, where they just didn't think this market was big enough. And they can still catch up. I mean, there was some rumors about Nvidia partnering with Intel so that Intel can make their GPUs, but that's a foundry play. I'm talking about that 200,000 ASP component that Nvidia is selling. Who can compete with that? And I think AMD is the closest right now for that.
Okay,
along with the hyperscalers.
And the simplistic view of a fool like me is it's about gaming. Forget about that. What does Nvidia mean, Mandeep, for Procter & Gamble? For Minnesota Mining and Manufacturing, for Ford Motor?
Yeah, so, these companies spend billions of dollars on their IT, over time. And when you think about their data center footprint, that will completely go away. It will be on cloud. And what large language models do is not only you need to rent the basic cloud capacity, you will run your AI on cloud. And that's where NVIDIA has positioned itself really well. It has partnered with the likes of Microsoft. I don't think all the hyperscalers are on board with NVIDIA, but for a traditional enterprise, they don't need to spend on IT anymore, especially on the infrastructure side. They will outsource everything to these hyperscalers, and NVIDIA is trying to becoming one of them.
Mandeep, when he talked over the weekend, I think everyone's BS star is up. You can translate what that means. Mandeep, when he talks over the weekend and uses the hyperbolic language like tipping point, the dawn of a new computing age and all those things, Mandeep, there are some people out there who just don't have the specialized knowledge to really understand where this is going. And it's a market of faith for many people in the stock market who just see the momentum and just think, I need to be a part of this. Mandeep, do you have any kind of cheat guide whatsoever to draw a distinction between what is real and what might be BS?
Well, so I look at, who are the key players who will determine the fate of this market. And they are quite concentrated. I mean, I mentioned about hyperscalers. Then you have got Apple on the smartphone side. What will Apple end up doing in terms of large language models? That will have a big influence in terms of the size of the opportunity for someone like NVIDIA. If they do everything in-house, then they're going directly to TSMC. Right now, NVIDIA has the technology, it has a monopoly, but it's going to TSMC to make its chips. If Apple does the same, and granted, they may not have that technology that NVIDIA has, but clearly you've got, 8 or 10 players that will determine the size of the opportunity and how this shakes out. And that's where I think you have to watch out for what they do, not what they say. And only time will tell what the hyperscalers will do. I can imagine them paying $2 billion to NVIDIA every year to upgrade their GPUs. It's just too much CapEx. And that's what we're talking about here in terms of the annual CapEx spend on something like this.
Mandeep, excited for your coverage on this story for the years to come, never mind the weeks. Yeah. Mandeep Singh there of Bloomberg Intelligence. NVIDIA in the pre-market, Tom, up by more than 3%.
I don't know what to make of it. I pretended this, but trust me, John, in electrical engineering, I went down in flames. They sort of stood the door here.
At least you took the class.
I took it was a quality C on its way to a D. But these guys are smart, and I can't parse success 3 years out with a story you talked about this weekend.
Sure.
That's why we need to talk to these experts.
Agreed. Coming up, someone also really smart, Katie Kaminsky of Alpha Simplex.
Yes.
Her views on this bond market was leaning the other way in treasuries recently after the moves we've seen over the last couple of weeks. Let's see if that paid off in a big way. From New York City this morning, good morning and welcome back.
My problem is everything else. The average stock year to date is down.
The tech names that we're discussing are driving the gains.
The bear market is continuing, okay? This is what bear markets do.
I think that the Fed's got more work ahead of it.
I think this is kind of the calm before the storm, so to speak.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowicz.
A special thank you to Luke's Lobster of New York for sponsoring the program over the weekend. That was
what
very
a
cool.
response that
Very
we
nice.
had to the Friday show. We should do that more often. Not today.
Let's not.
But it was thank you, folks. I got people out on Saturday going back and forth with me.
Likewise.
On the 422 places on Long Island where you get a decent lobster roll.
Did you order any?
Yeah, I ordered some. Yes.
Nice.
Yeah, didn't have any afterthought ate it all. But,
Oh, the whole family ate
oh,
the
it was
rest.
a fam effort.
Nice.
Fam effort. Yeah, to do a remortgage in the house. It's great.
Well, welcome back from New York City. Welcome back to you all.
I'm tanned and rested.
Good morning. Good morning.
You're not going to ask me why I'm tanned and rested?
I'm Jonathan Ferro because you lay out on the terrace and didn't do anything. Why?
No, Yankees Padres.
Oh, you went to the game?
Went to the game Sunday. Thank you, Steve Lanzone. Great seats in the sun.
Judge dominated them.
Judge, I've never seen a guy hit a baseball bat like a golf club. And Garrett Cole showed up for the Yankees, and Yu Darvish for the Padres had a lobster roll.
If you want to do a bit of baseball, let's do it. You have to go in person. You just have to.
Yeah.
You do not appreciate the power of some of these players. I think that's the thing that I missed. And when you see Aaron Judge in person, this towering figure just stand there, TK, it is pretty impressive.
I did a charity thing years and years ago with one of the second stringers for the Boston Red Sox. He was one of the littlest guys in the team. Johnny was ginormous.
It's amazing.
He was huge.
I tell you what, the thing that stood out for me, Tom, and we've talked about this before, when you see that throw go into third base from the far corner of the field.
From the right field.
It is.
Yeah.
It's amazing.
Dwight
like
Evans,
a bullet.
like ballet, they can do it like a bullet. The shoulders they have, the ability to do that deep in right field, 2 outs late in the game, and you got to throw it to third base.
So Yankees and not Red Sox. We're not talking about the Red Sox?
No, we're talking about the Red Sox. It's painful, but, you know, they're coming back. They're in a tough division. You know, like we talked to Julie Norman earlier about the Baltimore Orioles, surprise of the year. And the Red Sox, after a very quiet winter, are you know, come on, it's May. You know, usually by now the Red Sox, it's wrapped up, gone home, that's it, it's over.
Yeah.
And they're in the game, sort of. Padres are challenged.
We'll try and do some Formula One a little bit later. Let's hit the price action.
Welcome to our economics,
right now.
finance, investment.
Let's get to Nvidia. It's up by close to 4% in the pre-market. Big lift there. Lift in the equity market on the S&P 500 by, let's call it 0.6%. We've talked about this narrow dominance of a handful of names in the equity market, lifting everything year to date. Tell me, it continues. It continues.
It does. There's no question about that. And, you know, futures up 23. But again, I'm going to look at the spread market, which is showing me some real tension here. And this is the dynamics into the politics. 79 basis points of inversion. This is a substantial change in the inversion of the curve in the last 5 days.
Let's talk a little bit more about the Treasury market, Tom, because what we've seen over the previous 11 days before today, of course, closed yesterday, is yields higher, yields higher, yields higher at the front end. This morning, we come back down by about 5 or 6 basis points to 450. But we've priced out a lot of cuts and started to price in some hikes again. Citi's Andrew Hollenhorst, I think, has felt lonely over the last few weeks, still committed to that call that you get a hike in June, a hike in July.
Yeah.
Bank of America, Mike Gapin expects to hold Tom in June, but ultimately he calls this a close call. He says inflation is too sticky for the Fed to commit to an extended pause. This makes communication, I think, at the Federal Reserve meeting on June 14th a little bit complicated.
At the meeting, complicated and important versus all the, you know, blah, blah, blah here. And this goes to something we've avoided so far this morning, which is the pause and the skip. I mean, I don't care if it's a pause or a skip. It's where are we? And the answers were sticky. That London inflation on food was frightening, just frightening. There's no other way to.
Two stops before that Fed meeting. We've got payrolls on Friday. Then you've got CPI data on June 13th. If you could be long one thing right now, it would probably be Nvidia. If you could have been short over the last 2 weeks, something, it probably would have been the Treasury market. Katie Kaminsky was short that Treasury market. The chief research strategist at Alpha Simplex joins us right now. Katie, walk us through the thinking and whether that trade is still very much on.
Well, let's just think about where we are in the cycle, and let's think about what's happening in terms of long-term cash flows. I think people may be underestimating the effect of higher rates on long-term cash flows because they're just so used to things going back to normal. And so what we've seen is that the momentum in fixed income markets is short. And in some sense, the equity markets are saying that things are okay. And if that's the case, then the curve, and we're going to tolerate that inflation, then the curve is going to have to steepen. And particularly the long end of the curve is what I'm looking at.
How do you link the equity market on a trend-based basis with the bond market? How do you take trend-based analysis of the 10-year yield and fold it over to trend-based analysis of the NASDAQ?
Well, this is a good question, because I think what's happened to us, as those of us who are on the mathematical, more technical side, is that we've seen some very strong themes. We've seen strong equity momentum this year. We've also seen continued support of the short trade and fixed income, but we've been somewhat alone because most people have gone back to being bullish on bonds this year. And what's happening is you've seen correlations shift in March, and you're seeing new themes emerging, but the correlation between stocks and bonds, should we go back to an inflation, rising rates, or even a pause narrative, is actually positive on being short bonds and more neutral on equities. So you got to think about the correlations and how they're moving, as well as the signals.
With the correlations and also with trend following, can you call a bear market low in October? We're now up X% on SPX. And I mean, I get the correlation study, but actual trend-based analysis, Wells Wilder 101, did we establish a bull market in October?
Well, I always say that we don't pick the bottoms and we don't pick the tops. What we do is we look for confirmation. And I can definitely say that we've seen a massive turnaround starting in October. That has happened across multiple asset classes. It was sort of peaked in March when we saw sort of some weakness related to the banking sector. But we have really seen a pretty strong consolidation period since October. So I'm waiting for that to shift, and the new trend may be long equity, short bonds again.
Katie, this is a wheelhouse, and I know you're looking at this in the Andrew Lowe box just to the left of the third base dugout at Fenway. But the bottom line is the great Luis Yamato would say, okay, you've got consolidation and distribution, and then what? What is the then what for you in the equity market? What is the signal to buy more Nvidia?
Well, I'd say I am a little more concerned about the equity market because it has had such a strong run. Could it keep going? If we possibly, I think I'm more interested in seeing a breakout in fixed income, which is going the other direction, because we're seeing that stocks have come up so much. That suggests the equity market is very optimistic and thinks that sticky inflation is going to be tolerated, which means that long-term cash flows are more at risk. So for equities, it's actually looking pretty positive. People in general are thinking that we're just going to tolerate some moderate inflation. The problem's going to be is when people realize, wait a minute, look at these inflation numbers, they're coming back up instead of going down more. I think what you're talking about, the UK, is a perfect example.
So, Katie, I think what we're trying to figure out is whether the high yields that you predict are going to be a challenge or not to the narrow leadership so far in the equity market, which has been dominated from big cap growth. Is that a challenge or not?
Definitely. If you think about growth, I mean, growth has struggled a lot, and it was the most impacted sector during last year. And now that we've had a little bit of a slowing in interest rates, they've seemed to really raged back. So you're right. If we do see longer term cash flows go up, that is the sector that could be the most vulnerable because it has the most duration risk.
Well, that would be a big challenge, Tom, to the index level gains of the year so far for the NASDAQ, which is up more than 30. Katie, how would you explain then how resilient the index level story has been? Let's take the NASDAQ, which had, I think, one of its biggest weekly gains of the year so far, just last week on the NASDAQ 100, despite this move that we've seen in the Treasury market. What explains that?
Well, I personally think we're only reverting back to recent highs in yields. I'm looking for a breakout. I'd say that we've just seen a little bit of movement in fixed income relative to where we were earlier this year. And that's why we've seen a resurgence. So I'm much more thinking about the more extreme scenario as opposed to a small adjustment back towards the high. Remember, the 10-year went to 4% earlier this year. We're not back at that level yet. So I'm kind of watching for that more than sort of the tech resurgence after a period of really, really strong tightening of rates, which we saw last year.
Katie, let's go all CTA. Commodities. Help me here. The commodity trend is lower. Copper's off a cliff. It's a China play. I get all the fundamental chat. What does the trend following look like in long trending, persistently trending commodities?
Well, this is a good question because commodities have also been decoupled somewhat from equity markets. We've seen downward pressure in commodities, particularly the base metals, also energy. One thing I've been watching quite a bit is the energy trade. I mean, we've seen a massive downward trend, and there's all sorts of questions all the time from investors. Well, when are we going to see that move up again? So for right now, it doesn't look like that's going to happen soon, but it is something that has been in a downward trend for a very long time, which could, if we see some sort of movement, there could be something there. But you're correct. Commodities have been trading recessionary, equities have trading optimistic, and treasuries also somewhat optimistic in terms of where yields are.
Katie, this was great. Just to clarify your thoughts on some things. Kathy Kaminsky there of Alpha Simplex. It's going to be a new name. Short treasuries.
I like it.
That would work, wouldn't it? Short treasuries. Right now, TK, it's the trade for Katie Kaminsky of Alpha Simplex.
I made a Red Sox allusion there. This is where Alpha Simplex comes from is trend following. And this is John Henry of the Boston Red Sox and others, Monroe Trout down in Bermuda, ages ago, trying to figure out setups to get on trend, John. When do you get on trend? When do you go long or short, whatever the trend is? And just as importantly, when do you get out? And if you go to cash, what do you do next? And it's a real study. It's literally a cottage industry within the investment field. It's not something the CFA program that I'm part of follows closely. But for all of us, John Henry pounding out spark stations, Sun spark stations was done on. And then one day it showed up in the Bloomberg, and I'm like, oh, ADX DMI in the Bloomberg. Oh, parabolic SAR. And there I was doing my own Katie Simplex ballet.
Just quickly on cash. If you've been enticed into cash with 5% returns, TK, you know the tough thing about cash, it's...
Got to get back in.
How do you get back out of it?
It's
or do you just stick
wildly
with it?
Asymmetric. Getting out of an investment into cash is easy compared to I'm in cash. What do I do next?
It's attractive at 5%, and then you start seeing these gains in the equity market, and
there
all of a
go.
Sudden... 5% not looking as good as it maybe it did at the start of the year. Lee Ferridge of State Street joins us in the next hour. Looking forward to that conversation. The latest from Washington, D.C. with AMH down in the nation's capital. Up next.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. The White House and Republican congressional leaders are gearing up lobbying campaigns to win approval of a deal to avert a U.S. default. Both President Biden and Republican House Speaker Kevin McCarthy expressed confidence they would muster the necessary votes. The bill will suspend the debt ceiling until January 1st, 2025. Now, in exchange for Republican votes for the suspension, Democrats agreed to cap federal spending for the next 2 years. Elon Musk's private jet has landed in Beijing in the billionaire's first visit to China in 3 years. Sources tell Bloomberg that the Tesla chief is expected to meet with senior Chinese officials, including Premier Li Qiang, as well as visit Tesla's Shanghai factory. But the EV maker is nearing the final stages before starting trial production of its revamped Model 3. More than 30 NATO soldiers have been injured, along with at least 50 locals in northern Kosovo, as Serb protesters clashed with police and then with NATO peacekeepers. The demonstrators were seeking to block newly elected ethnic Albanian mayors from reaching their offices. The worst flare-up in violence in years threatens an EU-brokered plan to normalize ties between Kosovo and Serbia. Nvidia is set to become the first chip maker to achieve a $1 trillion market capitalization. The company's blowout revenue forecasts underline the enormous growth potential from artificial intelligence. Nvidia is poised to be one of the 5 U.S. companies with such a capitalization, joining Alphabet, Amazon, Apple, and Microsoft. Only 9 companies globally have ever achieved this level. Global news powered by more than 2,700 journalists and analysts in over 120 countries. I'm Lisa Mateo, and this is Bloomberg.
I think this agreement frames all that from limit, save, grow. It doesn't get everything everybody wanted, but that's in divided government. That's where we end up. I think it's a very positive bill. I think at the end of the day, people can look together to be able to pass this in the House and the Senate together.
The agreement prevents the worst possible crisis, a default, for the first time in our nation's history. I strongly urge both chambers to pass that agreement. Let's keep moving forward on meeting our obligations and building the strongest economy in the history of the world.
The big push begins right now down in the nation's capital to get this bill, this agreement passed. An agreement between the House Speaker Kevin McCarthy there and the President of the United States speaking over the weekend. I think on Wall Street just moving on, at least trying to anyway, and leaving this one behind. Goldman Sachs reflected on their note from over the weekend a couple of times this morning. We can do that again. Called it a major reduction in uncertainty, a minor reduction in spending. And that's the takeaway, Tom. The spending deal looks likely to reduce spending by something like 0.1 to 0.2% of GDP year on year in 2024. 2025.
You notice when Speaker McCarthy was talking there late at night, there was the congressman from the Carolinas, Patrick McHenry, without his bow tie on. I thought that was just bad form. I mean, you're in the exhaustive move of a debt bill. You got to be tonsorial and resplendent.
That's what you were focused on over the weekend.
There was bow tie on. It's like, it's tough sledding.
What's the
down
signal
in
from that? They've been working really hard.
They're exhausted.
They're
working very
right.
hard.
Okay, great.
We can take our ties off now. Hotseats wouldn't let us do that. Let's move on right now and get some important perspective here. Anne-Marie Horton is a Bloomberg civics lesson correspondent in Washington. Anne-Marie, best paragraph I saw on how silly the power game is was in the Washington Post. I'm going to steal this from Jim Garrity, writing it up. I believe it was yesterday. It maybe been the day before. And Mr. Garrity says, in the end, neither side had the leverage it wanted others to believe it did. Republicans still control only one chamber by a narrow majority. If they want deeper cuts to federal spending, they need to win a Senate majority in the presidency. Emery, can you take this out to the election of 2024? That's really where this is going to get decided?
Well, I think Speaker McCarthy is trying to make that point, right? We're in a divided government. We only hold the power in the House. And if members of his, like the conservative group, especially on the hard right, who some are even threatening to vote no against this agreement he struck with the president over the weekend, what they're going to say is, look, we have a divided government. The Democrats hold the Senate, the Democrats hold the White House, and yet we still were able to enact some spending cuts. And if we want more, we need to win more seats. And I think that goes for the Democratic side as well. The reason why Speaker McCarthy and President Biden both keep coming out and saying not everyone is going to be happy, because they obviously have issues on the fringes of both their parties when it comes to this agreement.
Emery, I know you've seen Lincoln, Daniel Day-Lewis. I think you've seen the movie 14 times. And Tommy Lee Jones is in there doing his Thaddeus Stevens imitation. And in the 19th century, it's about amendments. Is that what we're going to see here, an amendments frenzy over the next 72 hours?
Potentially. I mean, it's going to be striking the deal and then passing it are two very different processes. So striking the deal was a small group of people. And in the end, it came down to a 90-minute phone call when it was finally done between the president and Speaker McCarthy. Now, getting it through the House and the Senate is going to be very challenging in some parts of the process. So today already, one potential challenge is the Rules Committee, where you have some Republicans that are very conservative that may vote no to even get the bill on the floor. That could be the first hiccup. But by and large, many do see this passing through the House. Then potentially the Senate is where you can have amendments thrown at it, and it could just make the process so much longer. And the risk only there is that this really comes up against the June 5th deadline, deadline, which the Treasury Secretary says is not as soon as the U.S. could default. She has really said that this is a hard stop deadline. And that's where the concern is, because you heard the likes of Senator Lindsey Graham over the weekend. He was speaking to Shannon Bream on Fox News Sunday, and he was very upset about the defense spending. Now, defense spending looks like it'll increase about 3%. But what he says is that's nothing when you look at where we are with inflation numbers. And he doesn't think it's enough for the U.S. military. So you're going to have individuals want to come out in the Senate. Of course, you can have them filibuster. So this is where potentially you can see a very long, drawn-out, cumbersome process. But by and large, everyone I'm speaking to, the analyst notes that we're all reading, it does look like this is going to pass.
AMH, you mentioned one name there. Who are the other names you're looking for through this week?
Well, this week, I think first we have to start with the House, right? So I'm looking at the likes of Chip Roy, a Texas Republican, when it comes to what happens this evening. So today at 3 o'clock, you're going to have the Rules Committee. Do they give the go-ahead for this to even get on the floor? And then Speaker McCarthy is holding an in-person meeting with the entire conference. And that is where he's going to really hear those that are begrudgingly going to have to potentially vote for this and try to convince others to get this over the finish line. Then, of course, on the progressive side, it's the Progressive Caucus, like Pramila Jayapal, the House chair of that caucus. Where does she take her Progressive Party? Are they a hard no or could potentially get on board? We do know that the president and his main surrogates are calling these individuals. I think by yesterday morning, at least 60 House lawmakers the White House had already called. So both sides are really trying to back channel into the House. And then on the Senate side, I would say Lindsey Graham is one to look out for. Mike Lee had said early on that he would make the process very difficult if there wasn't steep spending cuts. So these are really the individuals to keep an eye out for.
Anne-Marie, let's finish where we started on the presidency, the race to be the president in next year's election. Bipartisan deals are probably good for the sitting president going into that campaign. They're arguably bad for the speaker's future in the House. What do the Republican candidates for the presidency think about this deal announced over the weekend?
Well, it's very clear Governor Ron DeSantis thinks of it. He says that we're nearing towards bankruptcy and this deal doesn't help that. And he was on Fox and Friends in the morning, kind of bashing this agreement. We have yet to hear from the former President Trump, who, of course, made that statement, who said that the Republicans should get deep spending cuts or default. But we do know that he has been speaking with Speaker McCarthy because there was a New York Times article that said that the president ran over or saw a New York Times reporter while he was golfing and was brandishing that he had Speaker McCarthy on his phone and had a chat with him. But we haven't heard from him yet. So potentially the former president thinks this is useful for them. The one thing the speaker does have, Jonathan, though, and I know there's a lot of talk of whether or not, because this isn't the deep spending cuts many on his far right flank wanted, does this mean that he could be ousted? He was able to get the president to the negotiating table. The White House thought they can just have a clean debt ceiling increase. And what McCarthy was able to do was keep his party together. The Wall Street Journal editorial talks about this unity that he was able to have was the leverage he was able to use to bring Biden to the table. So even though many don't like the bill, I think they do see that he was a successful speaker in this arena.
AMH, with the update, the recap down in Washington and the push forward as well. Anne-Marie, thank you. On the latest, TK, and the politics we're all excited for the next couple of days. Wall Street just wants to move on with this. Let's get it done. Let's just move on.
And with respect to this, John, we are so in the modern age driven by cable TV, this show, that show. I don't want to get into a political debate about it. Anne-Marie's living it every moment down in Washington with her team. But the answer is, heaven forbid, there's now a civics process. And it's not like they can tell a committee, oh, go away. There's actually a process, particularly for our international audience. There's a ballet here that is in place and we have to go through. And what's interesting down the road is the Senate after the House and the potential of a filibuster, which is its own conversation.
And they've got to get moving, Tom. We talked about the Treasury cash balance just south of $40 billion at last look. That number's come all the way in from north of 140 only a few weeks back.
I mean, I'm getting ready for a sell in May and go away equity market banner. That's going to look great. But, I mean, May's almost over. I mean, June is...
I know.
busting out all over, and with a jobs report as well. So
where's May gone?
It was cold spring, and it has been beautiful in New York the last number of days.
You seen the pollen
count? It's been
count?
a lovely May.
Everyone just walking around sneezing.
I don't get the pollen thing, and I'm sneezing.
Everyone's just walking around sneezing.
Yeah.
Wiping their noses.
Yeah. That bill has it. It's terrible.
Oh, the dogs have
the
got
dogs
it too.
get it too.
The dogs have got hay fever.
Oh yeah, the dogs.
Okay.
Absolutely.
Ed Al Husseini of Columbia Threadneedle. I never know if you're telling the truth or not.
It's true.
The dogs are sneezing.
Yeah, dogs are sneezing.
All right. We'll catch up with Ed next on this bond market and the T-bill issuance we may get in the next few months. Equities on the S&P 500 positive by 0.5%, a lift in this equity market with one name in mind, Nvidia. Let's take a look at that name right now, up by close to 4% and really, really close to this $1 trillion line in the sand. TK, look how close we're getting. 404.86 is the magic number, 404.18 right now. TK, we're basically there. $1 trillion market cap for this name.
Sell side, 9 months, 12 months hold. Can you buy it here? An institutional approach. Can you hold it or buy it here with a 3 or 5 year hold? I have no opinion. I'm not qualified on this. But yeah, I get the fixation of $1 trillion, but what do we do with it now other than listen to the CEO who's quite articulate about the dream?
I was asking the same question 2 weeks ago,
yeah,
a month ago.
Where do you think I get all my ideas?
When it was up 80, 90%. And now it's up more than 100.
Help me, Ed, please.
Let's keep going. In the equity market, this is what futures look like. The S&P, the Nasdaq a lift. The Nasdaq up by more than 1%. Year to date, the Nasdaq 100 up more than 30%. We're going to add some more weight to the rally this morning, potentially on the S&P 500 as well, up by 0.5%. In the bond market, the move higher. Got to keep going back to this. The shift higher we've seen in yields hasn't hurt this equity market. The 2-year retracing some of the move higher we've seen over the previous 11 days. We're down by about 4 or 5 basis points on a 2-year to 451.63. On 10s down about 8 basis points to 372. It's like debt deal move on and quickly. The cuts to spending, not that big. The hit to growth,
well, like
not
Goldman
that
Sachs
large.
said, we're clearing out, the rumors and the speculation, the worry, the angst.
Yeah, we're talking about basis points type stuff, Tom. For cuts to spending. I want to finish on foreign exchange. We did break 107 earlier today on the euro, 106.73 on that currency pair, the lower of the session, 107.31. Story of the moment, I think, over the last several weeks. High yields, dollar strength kicking back in, but as you were in the US equity market, just exceptional performance from a handful of names. AI, the theme to cling on to.
I'm watching Argentina and into the news here. I believe Damien Sassower darkens the door at some point. After Erdogan, Lira goes out weaker, 20.39. Mehmet Simsek is rumored to be in the new administration, the new government of Erdogan. That would be,
is that
for
good?
the West, that would be a good thing.
That's good.
Ex-Merrill Lynch. He's really competent. I've spent a lot of time with him. And clearly he's someone where the Western banks would be very happy.
Does that matter when we all know there's one man essentially in charge?
I don't know.
Of policy,
I don't know.
of the central bank,
I think
of all of the above?
Take the show to Istanbul,
That would be fun.
Ought to do after this important election. Right now, we're going to take the show to Smart. Ed Hosseini joins us, senior interest rate strategist at Columbia Threadneedle, Colgate Cricket from a long time ago. Ed, what's the biggest stereotype of bond market equity linkage that's wrong? What's the thing that everybody talks about, correlations, linkages, blah, 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 but it's just flat out wrong?
Yeah, I think if you look at the last 18 months or so, the big shift has been equities and bonds becoming positively correlated. That makes portfolio construction very difficult. It makes it very difficult to hedge drawdown risk with treasuries on high-quality bonds. That relationship is starting to break down, and we're starting to return to sort of a pre-COVID environment where bonds were, in fact, excellent hedges against risk drawdowns. And that's the change we're going through at the moment.
What is a likelihood? We just had on Katie Simplex, and she made it very clear that her likelihood, her trend, her bet is lower bond prices, higher yields, because no one's looking for that. How do you look at an outlier thought like that that's clearly away from consensus?
Look, I think there's room for inflation to surprise to the upside. I think that would be the catalyst for something like that. In my mind, I think pricing is pretty decent. We've repriced terminal rates for the Fed a little bit. We've given them a little bit more room to stay on hold in the second half of the year. I think that's the right place for us to be. And I think more importantly, if you look at real rates, things like 5-year real yields now close to 180, that's pretty restrictive policy. And I think that buys the Fed a lot of room to now transition to a pause.
Let's fold in the agreement over the weekend. Does that change the character of growth in any way, shape or form, the marginal cuts to spending that have been announced?
I think it's quite limited. And, particularly when we look at this setup versus 2011, when the economy was depressed and the fiscal shock was much more negative and had much higher multipliers into the growth story, that was close to 0.7, 0.8% of GDP for several years. We're looking at something like 0.1% of GDP now. It's a rounding error in this environment.
It's going to lead to more T-bill supply if we pass this. I'm sure you've already seen some of the takeaways. Hundreds of billions of T-bill supply coming to a market near you. It's going to cause chaos in markets. Let's go through things point by point. How does this work? From Treasury issuing T-bills to it bleeding through the whole system, what happens?
I think there'll be a fair amount of demand, particularly from money market funds. Government money market funds have been on the sidelines here. There might be some drawdown in repo and reserves on the Fed's balance sheet. That, in essence, is the process that we've been in since quantitative tightening started. That might accelerate the process slightly. But by and large, this is really a matter for the front end, the cash management part of the Treasury market. When you look further out, for the vast majority of investors who are trading credit or Treasuries, this should not be a significant event.
It comes at a tense time, or at least the hangover from a tense time in the banking system. Does it compete with bank deposits? Does it exacerbate any of that tension at all?
I think the correct answer is it could. But by and large, bank deposits have been bleeding out of the system for some time. That process is going to accelerate. They've been in competition with money market funds. You will hear people talk about things like the deposit beta, which is, in essence, banks are now under pressure to raise the interest rate on deposits faster than they've been pre the SVB shock. Does this change that equation? No, not really.
Servan's correction, I had Cesar with us. He's out at Marlins Yankees in Seattle and didn't want to get out of bed too early, so I guess Damien's not going to be with us. So we're thrilled you're here to talk the opportunities in EM. Long ago and far away, Ed El Husseini spent February in the Bahamas with Moody's. It was a really tough gig. It was amazing how you made the trip. In February, you did Latin America, Chile. Nobody's talking about the Argentinian mess, the IMF workout, what they're doing in a swap agreement with China. You're the adult in the room here. Is there an opportunity in Turkey, Argentina, and the other idiosyncratic stories of the moment?
I think there's a long tail of idiosyncratic stories in EM that are currently going through a restructuring process or are priced for a restructuring. And I think particularly in hard currency EM debt, that's a really interesting story. We have bonds in, Pakistan, Sri Lanka, Ghana, and so on, Egypt, that are priced, 20, 30, 40 cents on the dollar. They've now priced in a very aggressive restructuring. And so looking forward on a 2, 3, 4 year horizon,
right.
Outcomes there look quite attractive. Argentina and Turkey, boy, the policy mix in those economies is so difficult to solve. And they've been struggling with it really for decades at this point. It's difficult to be super optimistic. It's difficult to see an exit, a way out, the way you have with some other EMs.
What does the dollar do here? Does the dollar fold into bond analysis here? Like if you get a weak dollar like in equities, does that help you?
A weak dollar would really, in my mind, start to coincide with the Fed starting to be priced for an easing cycle, for the economy starting to roll over, particularly with labor market weakness starting to lead that story. Is that on the horizon at the moment? Not really. If I think about the next 3 to 6 months, if we think about the end of the year, beginning of next year, potentially. In my mind, the dollar is largely range bound. I'm not super excited for the dollar in either direction at this point.
Can we get the fixed income guy to comment on what's happening in the equity market right now, just quickly. Nvidia at the moment at 404.70, briefly through that line in the sand of a $1 trillion market cap. Ed, for most of this year, we've talked about cash no longer being trash. It yields 5%. Are we getting to a moment where the gains are so large in the equity market in some places that some people are coming to you and saying, yeah, about that, I'd like to go somewhere else?
Look, I think greed is a very powerful operator when it comes to risk. It doesn't really matter if it's equity or credit risk, and it's in play. And the one thing I'll point to is, to a large extent, real rates and interest rate volatility was a very negative drag factor for both equities and credit risk last year. Right. That's starting to go into the background. So you're starting to see, we're starting the conversation about correlations. This year, that increase in real rates really hasn't damaged things like equities, particularly tech stocks, that much. That, to me, signals a regime shift here and is very consistent with the Fed nearing the end of the hiking cycle.
Let's sum this up. 12 months forward, do you have the scissors out clipping coupons, or can you actually manage for total return?
I think you can manage for total return. I think bond prices, starting where they are today, plus the carry, the yield, the starting yield here, very attractive, both in real and nominal terms.
How much total return are you going to slap in a coupon? 100 beeps, or can you do better than that?
Boy, I mean, if we're talking about...
No one's watching. It's Tuesday after Memorial Day. Come on, stay with me here.
Look, I think we're finding very attractive value in short duration investment-grade debt, even in higher quality, high-yield debt and EM. Can you manage for total return well in excess of coupon? Absolutely.
John, February 8th, this is the old Ed, the Internal Medicine for Primary Care Convention in the Bahamas.
Was that where Ed was?
That's where Ed was. He used to go down for Moody's and say, he'd go down and analyze the Bahamas in February.
We're doing it all wrong, aren't we?
You got that right. It's just, what can you say?
Ed, this was great. Thank you, sir.
Fantastic.
Good to see you.
Thanks, guys.
Al Husseini there of Columbia Threadneedle. On the competition between bonds and equity right now, there's one winner at the moment. Nvidia up by 3.8% in the pre-market. TK, watching this one over the last few weeks, just tick for tick. It's been phenomenal.
And dragging the NASDAQ with it, up 1.3% on the NASDAQ as well. I want to make this clear. Why is Ed so valuable? Because we do economics, finance, investment, and he blends the two in, international economics and the macro babble, into what's actually going on with money. And there's not that many that can do that. Michael Darter would be another example.
On the equity side, I'm thinking of Andrew Sliman right now.
Yes.
Portfolio manager at Morgan Stanley. Conducted a really nice interview with the team here at Bloomberg going into the weekend. What happens if you get to September, October, going into the fall, and you've got these kind of gains on the screen and you didn't anticipate?
He is
That's
so
what Andrew's getting
dead
at.
on. We call that window dressing.
It's only
CFA
May.
level
I will
2.
say it's still only May. Let's see how this goes. Coming up for the next hour, looking forward to getting Greg Vallier's view over at AGF on the debt ceiling deal down in Washington,
You've been
D.C.
to the Bahamas? I've never been.
I've never been.
Never been. Road trip.
Do you want to go?
Yeah, absolutely.
Okay.
Take the Brammo. Take
All
the
right.
Brammo.
Take the Brammo.
Take Brammo. Take Brammo.
Brammo. If Brammo comes back, is she back tomorrow? I heard a rumor. She might turn up for payrolls. We'll see. From New York, this is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. Russia set it down to 8 drones aimed at Moscow early today, the biggest attack on the capital since the start of the war with Ukraine. The Kremlin has intensified its bombing campaign ahead of a long-awaited Ukrainian counteroffensive to retake occupied territory in the country's south and east. And Ukraine has accumulated billions of dollars of weapons from its U.S. and European allies for the military assault. In Spain, Prime Minister Pedro Sanchez is trying to hold on to power after a crushing defeat in Sunday's regional elections. Sanchez supervised his adversaries Monday by dissolving parliament and triggering a snap general election within hours of learning the full extent of his losses. Spanish parties will have less than 2 months to prepare for the campaign and the July 23rd election, which has been expected in December. When Jamie Dimon takes center stage at J.P. Morgan Chase's China Summit Wednesday, he'll face a business landscape that looks vastly different from a visit 4 years ago. In 2019, the last time the flagship event was held in person, the U.S. bank and its Wall Street peers were gearing up to cash in on China's opening of its $60 trillion financial sector. Today, U.S.-China tensions are high. The Chinese economy is sluggish, and Beijing is cracking down on foreign businesses. Deutsche Bank says its hiring spree in mergers and acquisitions will help it boost ranks and take back some market share from its Wall Street rivals. The German giant has signed on M&A veterans from peers including Bank of America, Credit Suisse, Lazard, and Citigroup over the past couple of months, and plans to hire more. Global news powered by more than 2,700 journalists and analysts. I'm Lisa Mateo. This is Bloomberg.
This is the new computer industry. Software is no longer programmed just by computer engineers. Software is programmed by computer engineers working with AI supercomputers. These AI supercomputers are a new type of factory. 15,000 startup companies in the world built on Nvidia today, building on Nvidia today, and 40,000 large companies, enterprises around the world are using accelerated computing. We have now reached the tipping point of a new computing era.
Every time this guy speaks, we add tens of billions of dollars to the market cap of Nvidia. That was Jensen Huang, the CEO and co-founder. Nvidia is the winner of the S&P 500 year-to-date so far, up more than 100%. It's up 3.8% this morning, 404.30 in the pre-market. I've said this a few times this morning. I'll say it again. If you are just tuning in, welcome to the program. 404.86 is the line in the sand. That would bring about a $1 trillion market cap. TK, this stock just breaking records all along the way.
For Global Wall Street right now, we're going to dive right into this. Alex Webb blew me away last week. Alex Webb blew me away with Bloomberg Opinion with actual discussion of Nvidia in English. We demanded he show up Tuesday to get us started here in the morning. Alex Webb joins us from London right now. Alex, you have the single best story on this phenomenon I've seen. You got 5 charts, and without question, the chart that matters is the place of Nvidia and Novanta and monolithic power system as having expensive major semiconductor chips or whatever. I mean, they're outrageously, the PE ratio is absolutely insane. What's the risk that they lose their premium pricing, their premium margin, their premium unit growth?
It's whether the others can catch up, and that was what was super interesting about the Jensen Huang presentation at Computex in Taiwan, is that he was making a very compelling case for this having a hugely lucrative long tail. At the moment, what we're seeing is the cloud operators saying, we need your gear in order to run the processors in the cloud that ultimately are going to be running the processes that fuel the AI revolution. What he's saying is that the applications for this are massive, and we are the first. We have had the first bite of the apple. We have the best stuff, essentially, is the case he's making. There are a few others in and around there. Nvidia has been the first mover. They also have their teeth in pretty deeply with those cloud operators, which means, essentially, our gear plays best with our gear. So therefore, you need to keep buying from us. And that's one of the reasons we're seeing the stocks bought so highly at the moment. I think it's trading at something like 52 times its forward earnings. That's actually come down as people have revised their earnings expectations upwards. The SOX semiconductor index, Philadelphia semiconductor index, the average is about 25 times its forward earnings. So it's a massive premium on the rest of the market.
I mean, I look at this, Alex, and I go 4 people down, and it's advanced micro devices, which I get as a competition. Do you look at Nvidia as a duopoly or triopoly, or are they like, say, electric vehicles where there can be 7 or 8 players 2 years out?
The thing that's actually going to be super interesting is a little bit more complex even than that. We're seeing a lot of the big tech companies, the Googles, the Apples, the Amazons, developing their own custom silicon, their own custom chips, ultimately that are manufactured in the same fabs as Nvidia's are. They're made by TSMC, largely in Taiwan. Now, those are the guys who look most likely to catch up with Nvidia when it comes to the AI stuff, right? They're having this sort of parallel processing, the clever whiz-bang tech that will fuel everything that AI is able to do. So it's almost like an internal threat, because these are also the customers. Microsoft, Google, Amazon, they're the people who are buying from Nvidia right now. The question is whether they can do something that does this sort of stuff as well as Nvidia can. They're probably a few years out, but that looks like the big internal threat.
The timeline, that's where I wanted to go. Alex, you're better positioned to answer this question than I ever will be. How quickly can you be knocked off the top of the pile? How quickly is this thing moving?
I mean, ask Intel. You know, it was 3 years ago that Nvidia knocked Intel off as being the world's biggest chip maker. It's a slightly broader way of defining it. Now, Nvidia is about 8 times bigger by market capitalization than Intel is. Now, the innovation cycles in semiconductors, you know, 3, 4, 5 years, it isn't something you can turn on a dime. Nvidia was clearly coming after Intel for quite a long time, and Intel doesn't compete in the same space. The bigger question actually is whether, even if somebody is able to catch up with Nvidia, can they get the manufacturing capacity from TSMC? Nvidia is there, they're the first mover. They are saying we need this many wafers this year. TSMC, please do that for us. If you're a smaller player coming in there, does TSMC have the space for you? The answer may be yes. There's a lot of new capacity coming online, particularly at the bleeding edge of this stuff. We also have Intel coming in as a foundry. These are the companies that make semiconductors for other people. So maybe this capacity is getting there. Right now, it certainly looks like Nvidia has a little bit of a lock on it.
So this is still all down to the capacity, Alex, of Taiwan Semi?
It certainly looks like that in the near term. The thing that we saw, right, is that there's one company in the world in Europe that makes the machines that can make these semiconductors, ASML. TSMC got so much of the early supply of those machines. So they are the ones who can make this stuff for now. The other 2 companies in the space, Samsung and now increasingly Intel, are coming in and getting more of those machines. That means that in a few years' time, there will be a lot more capacity out there. The question is, who is going to be hoovering it up? Who's going to be saying, we want to use it, we want to make our stuff? They have to run these foundries, these chip-making factories at really high capacity in order to justify the spend. These machines are insanely expensive. So there's a lot of capacity coming online. Is Nvidia going to be one that's using it all? In the short term, maybe. In a year or 2, it'll look a little bit different.
And look at the names in your wonderful article, Alex. And I guess I'm looking for the mini Nvidia. That's a mouthful. A mini Nvidia. I don't mean buy, hold, sell. And I'm not asking you to tell me they're going to make a ton of money. But if I look at Entegris, or IPG Photonics, or Qorvo, if I'm pronouncing that right, is there a mini Nvidia in your head?
Do you know what? There's a great piece I'll point people towards from our colleague in Bloomberg Intelligence, Woo Jin Ho, and he really highlights a few of the network players, actually. And if I'm going to be honest, I can't remember the exact names.
Well, that's okay, fine.
I'll point people towards it.
Yeah.
But it's not necessarily obvious players. The one thing that's actually a shame looking from a British perspective, there was a company called Graphcore which had raised a lot of venture capital, and including from big names like Sequoia. They were specializing in AI chips. They wrote that stake down in November, and it's looking like Graphcore is nowhere. That was increasingly looking like a player that would be able to come in and challenge the likes of Nvidia. Maybe their IP gets bought up by someone, and they create a viable challenger to Nvidia and, of course, AMD.
Let me segue, Alex. You can do it. Apple Computer really buttressed up against a 175, 180. What's the view forward on Apple Q2 calendar, Q3 calendar, and into the holiday back-to-school season?
I think the thing we've seen, you know, there's going to be a lot of chat in the next 2-3 weeks about what Apple does in augmented reality. That's going to get a lot of the headlines. It isn't going to drive any meaningful sales, at least not anytime soon. The reporting from our colleague Mark Gurman suggests that this is going to be a ramp-up comparable to the Apple Watch. Apple Watch, now quite a big, compelling product category, took almost a decade to get there. It's really the stickiness with Apple. They built so many products and services on top of the iPhone, which in and of themselves make money at a good, healthy margin. Most crucially, they tie people to their iPhone. So irrespective of whether it's a particularly compelling upgrade for the handset come September, October, November, people still upgrade. That is why the stock is so, bid up. There is a massive amount of conviction behind their ability to convince people to refresh.
I haven't upgraded, but I have noticed recently, TK, the battery life just starting to aggressively come down. You seen that?
No, I have wonderful battery life in my iPhone.
Oh, mine's terrible, but I didn't upgrade it.
The number one reason to upgrade is a battery life changes your day-to-day use of the phone.
Because Tim's in there manipulating the battery levels.
I am old. I mean, Alex Webb knows this. I'm old school on this, in that it's all about the chip, and the chips just keep getting better and better.
It's impressive, eh? This was great, Alex Webb.
Living.
Thank you, sir.
Yeah.
Alex Webb of Bloomberg. Quick take on Nvidia. What a run in that name. It's up by more than 4% in the pre-market and heading towards a $1 trillion market cap as things stand right now. 405. Lee Ferridge of State Street coming up.
We think where we are is the index is telling you things are rosy, things are fine, and the breadth is telling you otherwise.
Looking at the headline index in general belies some beneath the headline developments.
I wouldn't go chasing a whole lot here. I still think economic weakness, mild recession is in front of us.
Recessions aren't bad things. They reorder capital.
We might get a pause in June, but I wouldn't take a pause to mean that the Fed is done.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowicz.
Good morning, everyone. Jonathan Ferro, Lisa Abramowicz, and Tom Keene. Abramo off today, stretching it out over the Memorial Day weekend. John and I are looking at really exciting markets. And John, I think you've been right. I was going to underplay it, but I think you've been right to overplay it. Nvidia at a pre-market of $1 trillion. It's got to get your attention.
Amazing to see. Session highs,
26,000 employees.
Oh, just amazing. Phenomenal. Gains of more than 100% year to date on that particular stock. It's contributed to some decent gains at the headline level. On the index level, on the NASDAQ 100, up by more than 30% this year to date. This morning, we're up by more than 1%. Tom, the rally continues.
Well, the rally continues in the bear market. I was sort of surprised over the weekend. The bear market gloom wasn't as reaffirming or capitulation, whatever you want to call it. But futures up 25. Let's fold the data check right into this. I'm sorry. NASDAQ 100 with the Nvidia trail up 1.4%.
Futures up. We've got a debt deal. Treasuries are rallying. Yields are lower. A debt deal that most people just assume doesn't really cut spending by very much, if at all, in certain places. And Tom, here we go. We're down 9 basis points on a 10-year 370. Yeah. On a 2-year, we've had a big move higher over the last couple of weeks. We're back to about 450, yields lower at the front end by 6 basis points. And it's back to the data. You can refocus the mind.
Yes.
Get back to payrolls on Friday. Get back to CPI on June 13th and get to the Fed on June 14th. June is just around the corner.
Curve inversion here, early unemployment report this Friday, June 2nd. But John, what I would get back to in terms of yield is what do banks do with CDs? If we do get some form of yield adjustment, yield stasis, sticky inflation, the 30-year mortgage rate we haven't talked about yet today. The first thing I looked at this morning, 7.17%. It's up, it's up nicely here.
Let's put all these different issues together.
Yeah.
We've got a debt ceiling deal, potentially passes Congress this week. Let's see what happens. If it does, you get hundreds of $billions of T-bill issuance coming to the market. Does that compete with what the banks are trying to achieve, Tom, which is attract and retain deposits? We'll see how that plays out. Ed Al-Husseini sat in that chair just to Tom's left over at Threadneedle, Columbia Threadneedle, and essentially said that he doesn't think it's going to be a big deal. We'll see how it plays out in the coming months.
Currency market today. Let's do that briefly here before we get to Kenilworth Road. And that is euro dollar 107.44. You and I both saw breaking down through 107. And I'm sorry, it's a free fall to 105. We hit it at a 106 handle.
Briefly,
weaker euro.
106.73, the low of the session. 107.44 is where we are at the moment. Touch of dollar weakness against a bit of euro strength, reversing the trend of the last couple of weeks with yields not up but down this morning. But you took us to Kenilworth Road.
Good morning,
so
in
let's
the
talk
United
about
Kingdom.
it.
Yeah, this is something, folks. When you're, I love in England how you get relegated and you go down, and just as much you go up. And they're kicking penalty kicks at Wembley here in a weekend, and John saying, "Shut up and watch this." And one of the announcers goes, "This penalty kick's for $170 million." I'm
serious
like, whoa.
money, serious TV money. Serious money for getting promoted from the Championship to the Premier League. And what we're looking at, Tom, is Luton Town, and congratulations first of all to them, utterly unprepared to host Premier League football with a stadium that seats about 10,000 and an entrance to the Oak Stand that looks like walking into somebody's house.
So translate this for mere mortals in America like me. The Hatters of Luton Town are going to have Liverpool show up.
Liverpool. Mo Salah is going to walk through there.
On radio,
play
it's
in
a simple brick
that stadium.
building with a blue stand and a bicycle in front. I mean, this is more basic than Richmond, you know. Where
How
Ted
cool
Lasso's
is this, though? I
coaching.
mean, come on, how cool is this?
This is so
This
much
is
better
so
than
cool.
America.
This is so cool.
I mean, I'm sorry. I really love it. And one more comment on this before we get to our football expert, Lee Farage. But the basic idea, John, is all the people that went up last year, is it 3, right?
They all stayed up.
They all stayed up.
They all stayed
and that's
up.
rare.
Southampton, Leeds, and then Tom Leicester, which is just shocking considering they won the league back in 2016.
I love
all
it.
relegated to the championship.
Baseball would be so much better for this. There's just no question about it. We need to speak to someone expert on this, also on macro strategy of North America at State Street. Lee Farage joins us this morning. Lee, are you going to go to see Luton, whatever it is, the Hatters when Liverpool stops by?
I would love to, yeah. It'd be fantastic to go and watch a Premier League game at Kenilworth Road. Whether I'll be able to get a ticket, I'm not sure, because, as Jonathan said, there's not many tickets available, so I think it'd be pretty tough to get one of those.
We're going to see the ticket with inflation. Let's just go to this because I think it's something, John, and you are living with your families and all. The inflation in the United Kingdom is of an absolutely different character. We're talking about sticky inflation in America. How sticky is 9% food inflation in the United Kingdom?
Well, I think the food inflation is actually higher than that, Tom. It's 19% food inflation. You know, overall inflation is coming down, but still in the 8s. It's remarkable given how the consumer in the UK is struggling, how real incomes are falling, how mortgage rates have gone through the roof, which is very different from what we're seeing here. New mortgages here are higher, but not existing because we're all 30-year fixed. In the UK, people's existing mortgage payments in some cases have trebled. And yet inflation is proving remarkably sticky, and this is such a difficult position for the Bank of England. And it was interesting last week, we got the very strong inflation. We're pricing 4 hikes by the Bank of England, but sterling didn't go up. Sterling went down last week on the back of that because now the market is focused on, okay, you're going to have to hike a number of times to cure inflation, but what is that going to do to the economy over the sort of, you know, the medium term? And the answer is it's not going to be pretty.
It felt a bit like September, a replay of some of that, Lee. What's been amazing just sitting here, Lee, over the last couple of weeks, speaking to people like you, people we admire in the market, is just feeling the tide start to turn. All this enthusiasm for the rest of the world, for Europe, breaking down with a couple of data points out of China, a reality check in the Eurozone, if you will, with Germany potentially heading into a recession. And Lee, at the same time, you've got this monster outperformance on the market cap weighted S&P 500, on the NASDAQ, relative to the equal weight, relative to what's developing in China, overseas and elsewhere. And Lee, I'm just wondering, and Tom and I have been talking about this going into the weekend and coming out of it, whether we face another period of US equity market exceptionalism because of this AI theme.
Well, I think because of the AI and also because of the relative strength of the economy. And, you know, I've been on here and I've talked about this before. The U.S. is in a very different place from the rest of the world. And 91% of mortgages being 30-year fixed will do that. The consumer here is just not hurting. We have a very strong labor market. We still have excess savings from the pandemic. Yes, it's limited to those of higher income, but they're spending it. And at the same time, we have this fixed rate economy, whereas you look at the rest of the world, RBNZ stopped hiking last week, worried about the consumer because mortgage rates have gone up. Bank of Canada have stopped. RBA have stopped. Bank of England have got to carry on, despite the fact it's probably going to mean a deep recession in 2024. The U.S. is in a very different place. So you've got the AI element. You've also got the underlying economy, which is in a very different place from the rest of the world because of the structure of our lending market.
So, Lee, this is peculiar for you, almost original. You sound almost constructive, the U.S. equity market. Is that right?
It's a relative story, Jonathan. I'm not sure I'm constructive on the equity market, absolute terms. But relative, you've got to look at the U.S. and say, look, the U.S. economy is in a very different place from the rest of the world. The Fed, we're still pricing the Fed cutting before anyone else. And that bit I don't understand. We've taken out a lot of the cuts, rightly so. We still have a cut by January, and yet no one else has a cut in that early. Why have we got an earlier cut in the U.S. when the economy is holding up so much better than elsewhere, and the inflation is still sticky? We saw the PCE on Friday. Why are we going to be cutting before everywhere else that's actually, flirting with recession, in recession, on the edge of recession. We're nowhere near it yet.
So, Lee, just listening to you, they're the kind of views that I'd be wanting to push through the FX market, develop a little bit more dollar strength. We've seen some of that. Lee, as you look at that differential potentially closing, how would you play that theme?
I think you play it through the dollar. I've been bullish on the dollar for a little while. It's rallied back well. We got over 140 on dollar yen. That's probably coming to the end of the story. But I think when you look at euro dollar, you look at cable, you look at the dollar against the commodity currencies, I think this has got further to go. I mean, I think, look, eventually the dollar's going to be a great sell. It's overvalued, it's overowned, etc. But what we're seeing is institutional investors are now buying dollars again. The first time we've seen that since March. They've been strong dollar sellers. They flipped around. They're buying it again. They're looking at this U.S. exceptionalism story again. So I think that momentum and this relative rate pricing can carry the dollar through. Probably during Q3, we're going to see more dollar gains. We're up around 3% from the lows in the DXY. I think there's another 3 to 5% to go on that story.
Oh, give me some levels then. We've got dollar index right now just short of 104, cable at 124, euro dollar a break at 107 earlier, 107.43. What do I need to look out for on the single currency, Lee?
I think we're going to see 105 before we see 110 in euro dollar. We're going to go below 105 before we see 110 again. Sterling, I think we're going to see below 120 before we see 125. And I think sterling we're going to get back down towards 115 over the course of the second half of the year.
Wow.
But I think certainly right now, yeah, I'm looking at the emphasis now. We've seen the sort of dollar-yen move. I think the emphasis now is going to switch to dollar against Europe.
I just think this is too important. I mean, you two are seriously knowledgeable about this. The new coach at Chelsea? Are you kidding me? I thought
you want to go from a 115 call on cable to Pochettino over at Chelsea.
Just think how about Pochettino's getting paid and sterling gets to convert. It's going to be great. I mean, but the bottom line is the guy's supposed to go to the Tots and he went to Chelsea. What's that about?
You'll have to ask the man himself over at Spurs.
You know, I just
see what Dan Levy's up to. I've got no idea.
Get on a plane, John. Get over there and figure out
I've got no idea.
Is going on.
No
Lee
idea.
Farage. I mean, just
Lee making some monster calls there. TK
115 is 115.
We're 124 right now.
You know, I mean, we got to get Lee back on here soon. I want to talk to him about Brexit.
Lee Farage at State Street. You want to talk about Brexit? Why?
Yeah, I think everybody's underplaying it. Is Brexit a success or a failure? And, you know, I'm looking at the stickiness of inflation in the United Kingdom. That's killing people over there.
Going back to 2016, when Leicester won the league, 7 years later, relegated. Yeah. Just shocking.
My friend John just said, you know, he just said they're destined. And, you know, there it is.
It's sad. Greg Valliere of AGF Investments joining us next on this debt deal in Washington, D.C. with one eye all morning on this. Nvidia, session highs, 408. In the pre-market with a $1 trillion plus valuation.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. The White House and Republican congressional leaders are gearing up lobbying campaigns to win approval of a deal to avert a U.S. default. Both President Biden and Republican House Speaker Kevin McCarthy expressed confidence they would muster the necessary votes. The bill will suspend the debt ceiling until January 1st, 2025. In exchange for Republican votes for the suspension, Democrats agreed to cap federal spending for the next 2 years. More than 30 NATO soldiers have been injured, along with at least 50 locals in northern Kosovo, as Serb protesters clashed with police and then with NATO peacekeepers. The demonstrators were seeking to block newly elected ethnic Albanian mayors from reaching their offices. The worst flare-up in violence in years threatens an EU-brokered plan to normalize ties between Kosovo and Serbia. Elon Musk's private jet has landed in Beijing in the billionaire's first visit to China in 3 years. The Tesla chief already met with Foreign Minister King Yang and said the company is willing to keep expanding in the country. Sources tell Bloomberg Musk is also expected to meet with Premier Li Cheng, as well as visit Tesla's Shanghai factory. Global news powered by more than 2,700 journalists and analysts in over 120 countries. I'm Lisa Mateo, and this is Bloomberg.
I'm definitely heartened that you saw both parties there on the program expressing confidence that they're going to be able to raise the debt ceiling. Now, the fiscal decisions, of course, are between Congress and the president, and however they sort it out is good by us. But if you did not do that, the consequences for the financial system and for the broader economy would be extremely negative.
Trying to get used to this. A new face, of course, at the Federal Reserve, Austin Goolsbee, well known to us all. Good friend to this program over the years. Chicago Fed president speaking on CBS over the weekend. And one individual on the FOMC, the Committee on the Federal Reserve, leaning towards a potential pause at the June meeting. Before we get to that June meeting, we still need to deal with the payrolls report on Friday, then the inflation report, CPI, the day before the Fed meets. Bear in mind the blackout period, the quiet period for Fed speak, starts this weekend. So this is the final stretch of Fed speak so far, Tom, over the next couple of days. I think a lot of people share that view.
I mean, we're doing less of it here because Bramo's not here. I mean, Bramo would have, pushed the
I'm always suspect, if the person who takes a day off calls in the day after a long weekend.
Yeah.
Always suspicious of that, Bramo. Always suspicious of that.
You wonder how it's going to go.
You extend the weekend,
Yeah.
Where have you been? What have you up to?
I had fun this weekend.
What did you do?
I had 3 sailors show up at my house here with the United States Navy in Fleet Week.
3 sailors came
3
round.
sailors. They were submariners.
Did you invite them or they just turned up unannounced?
No, they were outside drunk and we took him in. No, they were family members, wise guy.
I've got no
one
idea.
Was from Maine,
who starts a
one was from
conversation
Idaho.
with 3 sailors
3
turned up over the
show
weekend?
Up. They're in their fancy uniforms. One's on the 2 are on the Oregon, which is a new submarine.
Okay.
Costs $1 gajillion. Our family members on the Montpelier, which is an older submarine, and these guys are serving the nation. And they go out, you don't know where they go, and they're underwater for months and months and months.
Were you polite? Did you thank them for their service, or were you rude to them like you often are?
I served them a case of Jenny Cream Ale, and they said thank you.
As you should. Good.
As I should. And what Greg Vallier knows is this ties directly in to our sailors and our officers, is they are on aircraft carriers, submarines, and everything else in the military and this budget debate. Mr. Vallier is with AGF Investments. Greg, you absolutely nail it this morning by getting beyond the cable TV idiocy to the Senate's outrage over the defense of our nation. What are we going to see? Not in 2 days. What are we going to see in 5 and 6 days from senators worried about the Pentagon?
Well, it's going to be a big deal. And Lindsey Graham, a famous hawk, blew a gasket on, I think it was Fox on Sunday, because the defense spending in this bill will be lower than the rate of inflation. So for a country that doesn't spend as much as people think we do out of our GDP on defense, this really angers a lot of Republicans.
It angers Republicans, but I'm going to suggest the Democrats are going to show up as well. I mean, Is it this is critical, Greg, is it a bipartisan fury of our officers and sailors, our infantrymen at risk? Is it bipartisan in the anger here?
It is, but we can't default. I think people realize that a default would be even worse. And during the course of this year, Tom, I think there'll be supplemental funding for the Pentagon. There's ways you can still get money from the government, and I think that you will see more spending during the year. But there's a lot of complaints right now. Just to bring it to tonight, there is a big vote tonight in the House Rules Committee. I think that Kevin McCarthy will prevail, but I think this thing drags on because of Lindsey Graham and others into next week, and it probably gets right up until June 5th.
Well, Greg, that's what I was going to ask. Do we have a week?
Well, that's a good question. Here's what I would say. If we hit the deadline, the Treasury can sell bonds out of the Highway Trust Fund. Treasury can sell bonds out of the Social Security Trust Fund and pay them back a week or 2 later. So I think it's highly unlikely that we would see a default. And I would add, if there actually looked like there would be a default, I think the markets would get so jittery, it would finally send a message to Washington.
Greg, we ask ridiculous questions in politics sometimes, like who wins,
Right.
who wins, who won after the weekend. Who do you think is doing a better job of just presenting what they got out of negotiations? Is it the president or is it Speaker McCarthy?
Well, I think the president's always been underestimated as a negotiator, and I think he did a pretty good job. The surprise to me, though, is Kevin McCarthy. I think he was held in low regard until a few months ago. He became House Speaker. He got something done. They didn't get all that they wanted. In fact, in this final deal, a lot of what they wanted got whittled down, especially on the total spending cuts. But no, I give both of them credit. But I think Kevin McCarthy is now a serious player.
Greg, the senator from West Virginia got a pipeline moving south from Harris. I believe it's Harris, West Virginia, on south across the border. Maybe it's Harris where it goes across the border to Pennsylvania, just southwest of Appomattox. Can you give out pipelines? There it is, from Bradshaw, West Virginia to Pennsylvania, Virginia. Okay, there's a pipeline for Joe Manchin. Can you give conservative Republicans a pipeline?
You can give people anything. And this was audacious. That's typical of Joe Manchin. He gets what he wants because he's still whispering that he may run for president. So everybody has to placate him.
Well, what about the 10, the 12, the 14 people blocking Speaker McCarthy's efforts? Can he give them a bone that's highway-like or pipeline-like?
Sure. I'm sure there are people who are going to have post offices named after them. There's lots of deals that are being cut right now to get this one holdout to vote for them later in the day.
Hey, Greg, what do you make of what the Republican candidates for the presidency have got to say about the deal that was struck?
Well, DeSantis was really strident and said, it was a terrible deal and we're still headed toward, financial ruin. It was a pretty strong statement. DeSantis now is in a position where he's got to throw bombs because he's so far behind that I'm not sure he can catch up.
Greg, just a final word on defense spend in America.
Yep.
And not for me to say what that level should be, by the way. Greg, can you just go through the numbers for us and really paint a picture of how much a percentage of overall spending defense spend actually is, and get to the heart of the issue, that if you do want to do something about the deficit in this country, don't they have to rethink what's happening with defense?
Well, I would say no, because we're not spending enough on defense. As a percentage of GDP, we're spending less than 3%. We complain all the time about Canada. They're not spending 3% of GDP. A lot of other countries aren't as well. And I think that as the Wall Street Journal consistently points out, we're not spending enough on defense by any historical yardstick.
So, Greg, if that's the case, where does that leave any negotiations over ever cutting spending and doing something about the deficit?
Well, you got to talk about revenues at some point. I mean, at some point that we have to at least look at taxes. I'm not saying we need a big, huge one, but fearless forecast, guys. The next big fiscal story is the expiration of the Donald Trump tax cuts in a couple of years. That will make this fight we just went through look like a picnic.
Greg Valliere, looking forward to that of AGF Investments. TK, you can see where this is going, can't you?
Peter
Just
Coy,
to some of that.
Peter Coy, wonderful at the New York Times. He absolutely nailed that in his essay on Monday after this deal. He said, look, we're all talking about spending. When do we start talking about revenues? You just heard that from Mr. Valliere
And you saw that in these negotiations, that was just a non-starter, a red line.
Yes.
For Speaker McCarthy.
Yeah, it was. And you know what? I just hope everybody in Washington got their trades in on the NASDAQ this weekend. I mean, I guess, are they still allowed to trade?
Nvidia, 407. Nvidia, 407.
I mean, this is, and I just did a quick scan of industrials. The Dow's not there. The Dow's actually flat to red on the screen. This is a tech rally, a tech relief rally, even with SPX up 0.6%, NASDAQ up 1.5%.
It's a monster rally. To cover that monster rally, Aaron Kennan of Clear Harbor, Victoria Fernandez. She'll be joining us from Crossmark. Andrew Sliman of Morgan Stanley right on cue. Looking forward, Tom, to catching up with Andrew in about 30 minutes' time.
Now, we're going to listen to that because you got to reframe here. If you're in the game, do you load it up? And critically, Andrew, we'll talk about people that have been comfortably in cash.
Comfortably in cash getting 5%.
Guy stopped me. I was mowing the lawn in a park over the weekend. The
on that Deere mower, yeah.
And John Deere, and the guy came up. He says, "You got Nvidia and the triple leveraged all cash?" I said, "No."
Nope. Does 5% cash start looking like trash with moves like that?
We had to gross out 13.2%.
Sucked away, and then get slapped around. Classic equity market stuff.
Bloomberg surveillance 4-day work week is Tuesday, not Monday. Feels like a Monday, but it is not. We've been looking at the festivities in Washington and certainly the festivities with a continuing advance in Nvidia. And you see it with the NASDAQ up a solid 1.4% off Friday's good move. SPX up 24 points as well, up 0.6% right now. The VIX 17.14. It'll be interesting to see how that folds out. Right now, we're going to go to the economic data, except there isn't any. Michael McKee joins us here as we stagger into the week. I mean, we've got jobs day on Friday, but first we got to look at housing data. The first thing I looked at this morning was a bank rate 30-year mortgage. Does the Fed care that we're at 7.17%? The moving average of the 30-year mortgage is right back up where it was before?
I don't think they're looking at the specific number, but they are interested in slowing down the economy. So the slowdown in housing is a good thing, but the problem for the Fed, of course, is that with nothing for sale at this point, because nobody wants to trade in their low-rate mortgage, then prices go up on housing. And we had seen and hoped for a dip in the housing component in the inflation numbers, but this may wipe some of it out down the road. A lot of what people are talking about today, though, is what's going to happen to the economy from this debt deal. We're waiting for the CBO score.
It's exactly what I'm waiting for.
But I have been reading through all of the research from the various Wall Street shops, and basically the consensus is you won't even notice it. It'll be like 0.1% or 0.2% a year from now. That's going to be the problem. And this is all against the CBO baseline. It's not like an actual, here's what we're spending and we're going to cut it by this much. It's what they thought would happen prior to this deal. So it's not a really big deal overall in terms of the economy, with the one exception of the law codifies the idea that the suspension of student debt payments ends at the end of August. And those people probably have a higher marginal propensity to consume. And so that money that they were saving and spending, they won't be spending. And that could have an impact. Mike Ferroli from JP Morgan suggests that because it'll be concentrated in a short period of time, could be maybe about 25 basis points or something for a quarter if people stop spending on other goods.
There's a judicial ballet there as well within student loans that we'll have to see as well. You and I follow CBO with immense respect. When will they weigh in with a bipartisan analysis of what was wrought this weekend?
They're going to need to get it in the next 24 to 48 hours because they need to have it before the votes in Congress. And so I would expect something fairly quick. And, you know, if the guy sitting around the computer at one of the Wall Street banks can come up with a model, they can come up with a model as well.
Are you modeling, you're not in the economic game like Steve Stanley is, but are you modeling a 200,000 statistic for non-farm payrolls on Friday? Early report?
You know, it seems possible because we've been surprised by jobs to the upside throughout this whole process. People keep pushing in the Bloomberg survey for lower numbers, and it doesn't happen. Interestingly enough, Mark Zandi from Moody's suggests that the budget deal could mean we have 120,000 fewer jobs created over the next year, which again is something that you're barely not really going to see in the data all that much. But the number of jobs created has to come down, or the Fed's not getting what it wants.
Michael McKee with us, of course, doing all of our economic coverage, and in a time here where we're really resetting into June, the final month of the first half of the year. What a wonderful time to catch up with Stephen Stanley, Chief U.S. Economist, Santander, the U.S. Capital Markets Operation. I have to go to the housing data this morning, and that finally, with Carl Case and Robert Schiller's wonderful index, we're back to negative statistics year over year. Mike just mentioned that the housing economy is completely messed up with locked mortgages and all that. Can you predict the housing economy now, or do you just give up?
Well, I think there are a couple of things that we can start with. We know in the long term that the market has been undersupplied for a long time, and that was exacerbated for a time during the pandemic. I think, we've had a sharp cyclical drop in demand as mortgage rates rose. But I think once things normalize, we're going to get back to a period where the supply is tight. So I think there's a strong underlying bid for housing. I think the other thing is, as Mike suggested, because there's a lot less existing home supply on the market, the share of new home sales as a percentage of total home sales has increased. And that's actually a good thing, because what we're working through right now is an excess of new home inventories. Builders had gotten basically had kind of gotten out over their skis a bit when demand pulled back, and now they're trying to work down inventories, and they've been able to do so faster because there's less competition from the existing
You are
side.
acclaimed for microanalysis. What do you learn from rent studies as you look at home ownership and for what it means for the whole economy?
Yeah. So, I mean, I think we kind of go back and forth on this from periods where the overarching goal is for everybody to own a house. We've certainly, have gotten ourselves into a little bit of trouble getting too enthusiastic about that. I think mortgage rates at these levels obviously change the equation quite a bit. But I will say, Mike before brought up the whole shelter cost piece of the CPI. And my big take there is that the movements there tend to be much more gradual than I think people are kind of braced for. I feel like there's this sense of, well, as soon as we peak and start to turn down, we're going to be 3-4 months and we're going to be in negative territory on this. And if you look at the data for the housing boom and bust 15 years ago, it took about 2.5 years to go from peak to trough on the shelter cost piece of the CPI, and the trough was basically flat. And that was a point in time when home prices were falling 20% a year.
We got coming up here at 9 o'clock, Case Shiller, 20 cities, and the survey's a negative statistic.
Yeah,
negative growth.
As Steve said, that takes a very long time to get into the CPI data. However, Steve, one thing that economists are pretty good at is forecasting CPI. And given that, at this point, is it really going to be as big a deal on June 13th, the day before the Fed decision, in terms of them making a decision? Or do they have a pretty good handle on it? And if so, what does that tell you about what you think they might do?
Well, I guess for CPI, a 10th surprise is kind of a big deal, right? So if you get a 10th higher than people expect, particularly, I haven't done my forecast yet. I don't know what the consensus is going to be, but let's assume the consensus is probably going to be 0.3 core, because that's usually what the consensus is. If the number comes out at 0.4 or even 0.5, I think it starts to raise some eyebrows. I think what you're seeing from Fed officials, or what you're hearing from Fed officials, is very much in line with what the data are showing, which is they're starting to get a little frustrated that they're not making any progress at all. I mean, you look at, so core CPI has been 0.4 or higher for 5 straight months. So, to your point about employment, the same thing on prices. Hope springs eternal. Economists keep forecasting 0.3 core, and we never seem to get it. And I think their feeling is that we're not seeing improvement in that piece that they've highlighted, that core services ex housing number, and until we see some sustained improvement there, I think they're going to be on edge.
I want to change the subject back to the debt deal for a second, because you really follow the Treasury market very closely. And there is a theory now that Treasury, having spent everything they have in the bank almost, is going to rebuild their account very quickly. The latest borrowing needs said they hope to be at $500 billion by the end of June. Right. If they do that, is it going to cause a massive liquidity drain like some people are predicting?
There's definitely going to be a huge ramp up in Treasury bill issuance. I would say it's not going to be as big a deal as it could be, because there's still a tremendous amount of excess liquidity sloshing around in the system. The Fed has done a little bit of QT, but there's still, trillions of excess reserves in the system, excess liquidity, I should say, in the system. And so I think that will help to absorb the bill supply. But yes, we're going to get bill supply coming hot and heavy over the next month or so.
Away from the pandemic, is there an analog to where we are right now? I mean, we have these historic moments, 94, obviously 01, the NASDAQ bubble and all that. But in your mind, Stephen Stanley, all you've done, Royal Bank of Scotland years ago and the rest, is there an analog to where we are right now, exiting the pandemic?
Well, I think the economy's in a bit of a weird spot, right? Because you're a year, 2 years out of a recession, and most of the business cycles in the last 30 years have been quite long, and yet the Fed has had to ramp up rates very quickly. And, the consensus has been for over a year now, it seems that the economy's 3 months away from a recession, right? So I think there's a presumption that that this cycle is going to be very short. And we'll see whether that plays out, because you don't really have the cyclical or the imbalances, the structural imbalances in the economy that develop over a long cycle. But what you do have, which we haven't had in a very long time, is tight monetary policy.
Mike's got a question for you. He wants to know what you're going to ask June 14th at the press conference. Could you imagine Stephen Stanley at the press conference? They just ignore him.
That's an interesting idea. We could ask Steve, what is it that you want to know from the Fed that you don't know, given how much all of them talk?
Well, I think that there's all this question about pause versus skip, and I think the issue in my mind is what exactly are they hoping to see? And we have the quarterly forecasts, so I guess we can use that as a baseline. But as I said before, I think in my mind what I see when I see those forecasts and then I see what's really happening, they're expecting a much bigger back up in the unemployment rate. We've got none of that. They're expecting inflation to come down pretty rapidly. We're not seeing that, at least in the core numbers.
We're running out of time here. When do non-farm payrolls break?
I think it's going to be a while. I think there's still pent-up demand in the labor market in certain sectors.
It's just... Stephen, thank you. Stephen Stanley with Santander. That's so important what he says there. He's won every award out there, folks. And for him to say, Michael, the gloom, and you know this way better than me, we got people looking to come down to under 100,000. We've even got people that have boldly said we're going to see negative non-farm payroll statistic.
Yeah,
I'd say Mr. Stanley's pushing against that.
If you want to get to the Fed's unemployment rate at the end of the year right now, you need many months of negative employment statistics. But they're going to change their forecast.
Yeah, the importance here is, I'm sorry, June 1 is coming up. June 2, Jobs Day, with all the work of Michael McKee. That's on the edge of getting towards the end of the year. Futures, I'm going to call it a daily high, up 25. Up 0.6%. NASDAQ up 1.4%. Stay with us. This is Bloomberg. Good morning.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. Russia said it downed 8 drones aimed at Moscow early today, the biggest attack on the capital since the start of the war with Ukraine. The Kremlin has intensified its bombing campaign ahead of a long-awaited Ukrainian counteroffensive to retake occupied territory in the country's south and east. Ukraine has accumulated billions of dollars for weapons from its U.S. and European allies for that military assault. The European Union has stripped out explicit references to China as a non-market economy in its joint trade strategy with the U.S. Bloomberg has learned EU nations agreed to a watered-down text of joint conclusions from a meeting of EU-U.S. Trade and Technology Council in Sweden that begins today. The newest version obtained by Bloomberg also softens earlier language on approaches for screening outbound investments. Nvidia is set to become the first chip maker to achieve a $1 trillion market capitalization. The company's blowout revenue forecasts underline the enormous growth potential from artificial intelligence. Nvidia is poised to be one of 5 U.S. companies with such a capitalization, joining Alphabet, Amazon, Apple, and Microsoft. Only 9 companies globally have ever achieved this level. And Canary Wharf has become the latest symbol of the global real estate downturn. Moody's has downgraded the debt of the landlord and predicted a challenging funding environment for at least the next year. Now, the East London Financial District, home to the skyscrapers of HSBC and Barclays, says it may need to rely on asset sales to repay borrowing or inject fresh capital into the business. Canary Wharf has more than $1.7 billion of debt coming due in 2024 and 2025. Global news powered by more than 2,700 journalists and analysts in over 120 countries. I'm Lisa Mateo, and this is Bloomberg.
If inflation stays sticky, or it comes down because we enter a non-trivial recession, it's equities that I think are a scary place. They're not priced very consistently with bonds, and we're going to find out who's right in the next year.
Cliff Asness of AQR speaking with David Rubenstein. Mr. Rubenstein, you could watch the full conversation with Mr. Astis, Dr. Astis, Bloomberg Wealth, with David Rubenstein tonight, 9 p.m. in New York. I really can't say enough about this, folks. Cliff is one of the recent graduates, I should say early graduates, of a huge double-degree program at University of Pennsylvania in computer science, and then on to Chicago, one of the sharpest guys out there, whether you agree or disagree with him. Serious, serious conversation for global Wall Street. That's what we like to do with Damian Sassower. Always interesting, but ever more so where the idiosyncratic is not becoming idiosyncratic. You can say suddenly things change in the emerging markets. He's chief emerging markets credit strategist for Bloomberg. I don't even know where to begin. There's so many stories to go with. Let's start with Turkey. Okay. With an election, we print through 20. It's like Dow 10,000, 20 lira per dollar. It's convex log. There's a momentum to it. What does Erdogan and Semsek, if he is selected, do, the ex-Merrill Lynch dynamo out of Istanbul, what does Erdogan, Mehmet Semsek, do to staunch the move?
Well, it's amazing. Semsek was once the deputy PM under Erdogan in 2018, but then he was replaced by Erdogan's son-in-law, Albayrak. So, yeah, no, it's nice to see him back. It's nice to see some continuity. He's returning, hopefully, to the Central Bank of Turkey. But I think, look, I mean, if you listen to people like Morgan Stanley, they're calling for dollar lira at 28 by the end of the year. You look at the market itself, it's pricing in something on the order of 25. So there's more pain ahead for the lira. But I mean, I can remember the days not too long ago, Tom, when we were talking about 6-handle, 7-handle in lira. You're absolutely right.
But
we're over a 20 handle now.
this is not a banana republic. It's not, I don't mean to make a joke here, but this is not a Steve Hanke down at Johns Hopkins country. This is Turkey, a NATO nation. How does the politics fold into the pricing and sweat of your EM debt price down, yield up?
Well, certainly, I mean, investors aren't really invested in Turkey anymore. I mean, it's down 85% over the last decade, so there's not really any positioning there to speak of. I think what's interesting, though, I mean, you have to think about the earthquake. You have to think about the fact that net FX reserves are now negative. They've actually formally, officially announced that they have no FX reserves left to protect the currency, and yet they have such control over it. I mean, let's be real. I mean, Erdogan and basically the policymakers there have complete control of the lira. People can't move their money into and out of Turkey with any regularity whatsoever, so it's not a speculator's market anymore. So I think what you have to do is you have to look at what might come next. Yes, you might see rate hikes coming back into the fray, but is it really going to be enough to protect the economy and defend the currency? Probably.
I just don't think they can put up walls around it like they did in Constantinople years ago. I'm going to go to the blue dollar. I got a great chart from our people in Buenos Aires of the black market in Argentina. And I know it's a discrete story. The IMF has given them a ton of money. They failed. The blue dollar peso, the peso's at 238, folks, per dollar. And the black market peso is at $4.99 to print 500 today, I presume.
The real story in Argentina right now is China. Is the fact that
the swap market
is because they haven't renegotiated the $44 billion IMF line.
Right.
They are now turning to China. I'm talking Buenos Aires. The Fernandez administration is turning to China to increase that swap line because they can't pay their employees. They can't pay their people.
What is the collateral they will? What are the promises, visible or less visible, that they will make to Beijing?
Well, it's going to be commodities, right? It's going to be their agricultural exports, hopefully, because that's really what the economy is kind of premised on. But with the drought and all the things that are going on fundamentally there, I don't even think Beijing is going to agree to it. And I think that really takes us full circle here. I mean, going into this year, and really for the better part of the first 4 months of this year, it was about China's emergence from COVID and the recovery. And now that is pretty much off the table. And what you're seeing in China is dollar yuan at 7.08. You're seeing China yields at near historical lows, or at least certainly 5 or 6 year lows.
The equity markets.
And that's telling you everything you need to know about growth globally. I mean, the fact that it is underperforming. But what's really interesting, look at the pro-cyclical equity indices. Japan, South Korea, the Kospi, they're up huge. Look at obviously the NDX, the NASDAQ is up huge. So they're telling you a different story here. And I wonder, we always hear you guys talk about it's just a few, it's just the Nvidias of the world that are moving the NASDAQ. Right. It's the same thing in South Korea. It's Samsung that's moving the market, pretty much 90% of all inflows.
So let's dovetail this, folks. And this is really important. At the IMF, the bombshell was a 5-year view of global slowdown. Whether you believe in that or not, it's a prediction we'll see out there. And the solution globally is to go to quality. Where's quality EM?
Well, we're going to have some more confidence this week after we hear the minutes out of Mexico, because if you just look at currencies, which are the most liquid way to play emerging markets, it's the currency market. So on one hand, you've got Mexico, Hungary, Colombia, the high yielders that are up near double digits this year. And on the other hand, you have South Africa, which is down 13, 14% this year. And it's also considered a pro-cyclical economy, but what it is it's a manufacturing driven, it's a commodity exporter. I'm talking South Africa here.
Mm-hmm.
So in a services-led kind of rebound, which is what we're seeing globally.
A tech-led
rebound,
right,
if you will.
Right.
It's going to be, the pro-cyclical Kospi, the Nikkei. It's not going to be South Africa that leads the way, and that's kind of what we're seeing in the currency markets.
And this is my life, folks. Qantas is in my ear saying, ask him about Nvidia. Damien Sassar, only I can do this. Tell me about Taiwan dollar off of Nvidia. I mean, that's where the stuff's made. Give us Qantas wants a Taiwan dollar view. Off of Nvidia.
So when we've said this, I've said this till I'm blue in the face. The Taiwan dollar is a great funding currency. It's a currency that you would short in order to put on your longs in high-yielding emerging market currencies.
You sell Taiwan and buy what?
And you buy Mexico, you buy Brazil, you buy these high yielders, and you clip the rate differential. That's really been the play here. What's interesting, I think, for me, is that Taiwan's kind of flat to up slightly on the year. It's actually held in pretty well. And again, it's probably in large part due to Taiwan Semiconductor and the fact that you're still seeing equity inflows into Taiwan, which is supporting the currency on the whole. But I think, look, if we do see a flight to quality move, it's going to be an unwind of these carry trades, and the Taiwan dollar is going to be a leader there. The Japanese yen is going to be a leader there. These are the funding currencies that people have made their mint in emerging markets on for the past 6 months, Tom.
So
all that goes away.
I can do this on the Bloomberg Professional Service, folks. I can take Taiwan dollar 32 down to 30, and you're suggesting it reverts back to strong Taiwan dollar, back to 28.
You're looking at the other way, right? It's dollar Taiwan. So a higher, down to 30 would be a stronger Taiwan, right? It would be a stronger Taiwan dollar in a risk-off scenario.
So what does Japan do? I mean, Japan's not EM, but maybe they got a monetary
140
policy.
And change. They would probably come down too, right? I mean, again, these are funding currencies, and if we do see this kind of washout and the carry trades get unwound, those are the two currencies that are definitely gonna outperform. But their equity markets already are doing that.
Right.
So it's really quite unbelievable if you just look at it from an investor standpoint. I mean, the market's telling you two different things.
I got to finish up with renminbi. I look at CNY. I know some people look at CNH, the offshore as well. But the fact is, it's not that it's backed up weaker yuan. It's the way it's done it. Is it managed?
Oh, yes, it is. But I think what's going to be interesting here and what the markets are most afraid of is that Beijing is allowing it to depreciate now because it wants to wash out all the speculative shorts. And once, I think the fear is that, look, they're going to let it go 708. They might even let it go 710, 715.
Yeah,
I mean, that wouldn't be foreseeable. Yeah. But at that point, basically, there's a lot of demand for yuan. From the dollar exporters in China. But I think what's going to be interesting is let's just see if the speculators really get washed out on this move. I think that's what Beijing is trying to orchestrate.
They can control it that much. They can orchestrate.
Yeah, it trades within a range. It's been a very stable currency. I mean, from a carry to vol perspective, the China yuan is still a pretty. It's a pretty good performer.
What's your single best EM opportunity this morning as you write for Bloomberg Intelligence?
Well, I think we got to look at the minutes in Mexico. I actually still like the Chilean peso because we saw central bank minutes out of Chile yesterday. They came in pretty hawkish, much more hawkish than the market anticipated. So the Chilean peso is one of the few currencies that are up today. I kind of like it. I think you can probably still clip some pretty good yields there. I don't think the easing cycle is going to begin by Q3, which is what the market's pricing in. Yeah, I like the Chilean peso.
See, this is the difference, folks. I'm watching Padres go down in flames to the dreaded New York Yankees, and Damien Sassauer is reading Chilean minutes of what we'll see. Damien Sassauer, thank you so much with Bloomberg Intelligence. Of course, some really important work there. It is an extraordinary time. I think John did a great job this morning of really featuring Nvidia. I'm like, well, okay, it's $1 trillion company, 26,000 employees versus, say, 270,000 employees for other $1 trillion companies. It's an extraordinary story. We're going to drive this conversation forward, of course, with the leadership of Bloomberg Technology. Look for that through the day. And frankly, we'll go into the Asia morning. Coming up tonight at 11:30 p.m. East Coast time, a follow-on interview from what we did a couple weeks ago, but it's important. This is with our Stephen Engel, our strongest in Asia. Steve Engel with Jamie Dimon. Look for that tonight from Shanghai. You can see that at 11 p.m. New York time. I'll let you figure out the time zones. Damien knows the time zones. I don't really know the time zones. Tonight, Jamie Dimon. This is Bloomberg. Good morning.